rocket ship of a computer, I decided to bump up frame rates a little bit. Maybe we even get a better picture. Kind of what I'm hoping for. For those of you that have watched me fail miserably on the YouTube stuff, it should be 100% now. Got everything where it needs to be. Guys, I'm excited to be here. I'm excited to be here every day. We're going to go through and we're going to talk a lot about what we do over and over. Same thing. Repetition, 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 guys. The only thing that Nexgen cannot give you is repetition. We can't give you experience. So what I'm going to do is I'm going to give you a foundation so that you can go create your experience. And that's really what this classroom is, guys. It's a very foundational approach to learning, and then it's a lot of feedback. And feedback is where it's at, guys, because we're going to spend about an hour talking about the basics, and then you're going to spend a lifetime learning to do everything that you can do with the software. In 15 hours every week, I'm live. I'm here, and I'm 100% committed, 100% committed to helping you get to exactly where you want to be. So that's what we're going to do today. We're going to talk about advantages. And the first advantage we can give ourselves, guys, is know when there's news. Know when there's a news release, because there are people waiting to react. There are people with a lot of money waiting to react. If you watched at 8:30, unemployment claims came out. And oddly enough, they were exactly spot on after the revision, I suppose. And it moved the market a little bit, but it wasn't overwhelming, just a quick little bump. But at 9:45, guys, we've got flash manufacturing PMI, flash services, and then right behind it at 10 a.m., it's existing home sales. This is 2 high impacts, 1 medium impact, guys. And this is the stuff that we see that can make the market really spike and jump and bump and take you out of what could be or what was the perfect trade. I put absolutely no stock, no importance in what the news is, but rather I understand that it could create a scenario that takes away my advantage of a smooth moving market. So every morning I come to forexfactory.com, I check for news, and we see what's going on. And set a timer or whatever you need to remind you not to get in front of there. Welcome, new folks. Good to see you. I got some new names in here. I love it when I have new names in here. Glad to have you. Straight from forexfactory.com. I'm going to go to the Nexgen website. There are no secrets with Nexgen, guys. There's absolutely nothing that we won't give you to push you towards success. I'm not going to charge you for more information. There isn't a secret class that you have to take to figure out the entries. Every answer, everything I talk about comes from the trading guide. And you'll be able to find it, go back, study it, review. Everything that you need from here to be successful as a brand new user, I promise you, I will give you in the very beginning. Every tool that you need to study, every look that you need to be successful, I'll even hand you a solid trading plan. But as you grow, there's an awful lot of information going on. So make sure you look around and take a gander at what's available. And then the glossary of common terms is where I like to start every day. And specifically, a high probability trade. And the reason that I stop right here and highlight high probability trade is because this is a trade, a high probability trend trade. What is this doing here? Microsoft doing some weird stuff. A high probability trend trade is a trade where each indicator on every chart agrees for the rules for the trade. Your triggers will be the strongest, no termination conditions exist, and there will be room between your entry and your target, guys. This is what we talk about for the first hour every day. It's the exact same thing. It's this dead horse that we just keep beating. Because the high probability trend trade, the way it's taught is a trade that typically wins 70 to 80% of the time. The high probability trend trade with that success rate creates confidence through the memory of that success. But the most important thing about the high probability trend trade, guys, and this is what I really try to encourage, enforce, reinforce, I don't know. I'm at a loss for words this morning, which is weird for me. It's going to teach you to read your indicators, guys. once you focus on this high probability trend trade, you keep it very, very simple. You're going to learn to read your indicators. You're going to be able to look at your charts and you will understand where the market is likely to continue. This becomes your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to help you with your management plan. And then finally, you will understand where the market is likely to stop, guys. There are these key Fibonacci areas. And these areas, we're not the only people that know about them. This isn't just a little next-gen secret that nobody knows about. As the institutional traders, the people with the deep pockets, the people that create and end trends, know exactly where these numbers are. And you'll be absolutely floored at how often they stop the market. And I'm going to give you a recipe so you know not to trade into them. Ellie says good morning with her squeaker toy. And she says make good decisions. So we focus on chart reading because 90% of your day is going to be spent looking at your indicators and waiting for advantages. 10% of your day is going to be spent trading when those advantages are present. And I like to think of catchy little cliches. And guys, we're not looking for trades with this software. We're looking for reasons to trade through advantages. We're searching advantages first, and we're allowing advantages to be the reason that we enter. So we're going to keep it pretty simple in the beginning, and we're only going to look for 3 advantages. This is your high probability trend trade rules. There's only 3. Each rule provides an advantage. And the advantage isn't exclusive to the high probability trend trade. So your first rule says that you have to have strong trigger lines. This will give you the ability to recognize momentum, to look at a chart and say to yourself, oh my gosh, the market is screaming in the direction of the trend and it's likely to continue. Rule number 2, no termination conditions. Those are those likely to stop areas, making sure that you're not trading into those key areas. When there's none present, you'll have room to profit targets. And when you have room to profit targets, you'll have what we call a clear path. Now, momentum in a clear path is enough to build a profitable trading plan. Momentum in a clear path is enough to give you everything that you need to be successful. Good morning, PFI. But we're going to add a third rule. And you'll add third rules for the rest of your career. But the initial one is designed to put you into the market where the market is most likely to continue. To take advantage of momentum, to take advantage of that clear path, and to get into the market exactly where the market is most likely to bounce and continue with that trend. So it's only 3 rules. Ellie, baby, other room. It's only 3 rules. And these 3 rules happen only on 2 charts. Simplicity is my battle cry, 100%. I try so hard to not outthink myself and put you guys in a position where you don't outthink yourself. So we're going to keep it basic, 2 charts, the large chart, and guys, more specifically, the first bar, the most current bar, the active bar on the large chart will define the direction, the momentum, and the areas of the market. It will define whether you should be looking for trades to go up or down via the background color. It will let you know whether or not you have that advantage of momentum through strong trigger lines, rule number 1. And it'll let you know if you need to pump the brakes because you've reached a key area through rule number 2. Once the rules are met on the large chart, and this is one of the things you're going to hear me say a lot today, when the rules are met, then and only then do you go to the small chart. There's a gentleman in this room that doesn't even look at a small chart until his rules are met on the large chart, which I think is brilliant. But once they are, this entry chart, this small chart, will take an x-ray of that 1 bar. And this 1 bar is going to be broken down into typically 20 to 30 bars. By using that refinement process, guys, you're going to pinpoint exactly where the market is most likely to continue. You're going to be able to enter that trade with the least amount of risk and the absolute most profit potential. And that's where rule number 3 comes in. Rules 1 and 2 will carry you through the duration of your career with Nexgen. Rule 3 is only specific to the high probability trend trade. You will find more opportunities when you can identify momentum in a clear path. We use these 2 charts, and I like this because it reminds me whether I'm fighting or flowing, right? Your large chart is a representation of the large crowd. It is the people that move the market. And when they wake up Thursday morning and they say, you know what, I think I want the market to go up today, the market goes up, guys. And these are the same people that are going to create the momentum that we look for. And these are the exact same people that are going to react to those key areas. Once they tell us, hey, we're going up fast, and there's nothing in the way, we're going to come to a small chart, a refinement chart. And guys, this is the small crowd. And the small crowd still has more money than you, more power than you, more influence than you. You're not a part of the small crowd. And these guys love to fight the large chart. This is what creates those ups and downs in the market. We can pinpoint where they're most likely to fail when they fight the large crowd. And they fail typically 70 to 80% of the time, which means that through rule number 3, we can pinpoint their failure, we can enter the market there, and we can get right back on board with the large crowd, and just kind of do what they've done. And that's why we only use 2 charts, and that's why there's only 3 rules. And the way this class is taught is we spend time going through the trigger line and Fibonacci rules for when it's okay to trade. I'm going to break them down individually. I'm going to show them to you. We're going to talk about them. You'll see pictures, and I'm going to give you every tool that you need to study them. You guys simulate, practice. Don't feel like you have to be great at something before you practice it, right? That's what practice is for. Get on your simulator. Practice entering, practice exiting, practice moving stops, scaling charts, all the things, all the mechanics, guys. That's what you're doing on simulator, is you're just practicing. But the key is every time you take a trade, every time you look at your chart and you have a question, take a picture, post it in the room, guys. This is the magic of what we do. When you're learning the software, you need to know what you're doing right and what you're doing wrong. That's what the classroom's designed for, is to give you that feedback, to go through that process, to discuss your chart read and make sure that you're not making mistakes. One of the biggest things that I see is that people listen to class for a day or two and they create their own reality of what it means to have a rule met. And then when they finally post in the room a month later because they're struggling, it turns out that their reality is not what the rules are. So start in the beginning. Let's make sure that you have clarity and let's get you exactly where you want to be. So post your trades in the room, and just a little reminder, every time you post in the room, I want you to discuss on your chart, I want you to mention momentum and whether or not it was there. I want you to talk about your path and then tell me where you entered and why. And the reason we do this is because I want to make sure that you're reading your indicators correctly. I want to make sure that your entries have the least amount of risk, and I want to make sure that you're giving yourself enough room to make those profits that you want. So every picture that you post in the room is a conversation. It's like a private session. And then we're going to simplify. We're going to talk about that highest probability trend trade. Your ability to read the indicators will open the door for what we call medium probability trend trades. I'm going to give you a solid plan for 2 trades, a solid plan designed to optimize your chances of success. But you've got to learn what looks you're going to commit to, guys. You've got to begin to commit these looks to memory. Everything that we do is patterns. The market has a memory, and guys, the market does the same darn thing every day. We're going to train ourselves to wait for a pattern that has been proven to win more than it loses, a pattern that creates a statistical advantage, and the only time we're going to pull the trigger is when that pattern is true, when those rules are true. So you're beginning to teach yourself patience from day one. Use your spreadsheet. So your step-by-step path to becoming a confident trader. ASAP, guys. Post in the room. Don't feel like you can post too much. You can't. I haven't met anybody that does yet. And as long as you're telling me what you're doing, then there's an educational value in there, guys. If you flood my room with pictures and don't bother saying anything about them, then you're not really looking for help. What you're looking for is attention. And DM me. We'll talk on Skype, and I'll tell you how wonderful you are. But for the classroom, make sure you're annotating those pictures. Make sure you're telling me why so that we can move forward together. And then the second thing is use the spreadsheet. And I give this to you guys every day. I'm going to give it to you again right now, this very moment in the chat box. And there are 4 tabs. The first tab is your trade journal. So if you take a trade, it belongs on this sheet. Not because I want you to have busy work. But what you're going to do is every trade you take, you're going to put on the sheet. You're going to talk about the advantages, whether you won or lost, because it's fun to gauge your progress to see how you're doing. But I think that the most important one, maybe it sounds a little egotistical, is feedback from class. Was your chart read correct? Did you break a rule? Was there a challenge that needs correcting? And what you'll find is that if you get in the habit of filling out this spreadsheet every morning, wake up, pour a cup of coffee, come back, and look at yesterday's charts. One of the reasons annotation is so important, what we're doing is we're creating a repeatable scenario. And you're going to ask yourself, what worked and what didn't work? So you're going to be able to police yourself. These are the patterns that are bringing me success. These are the patterns that appear to be taking success away from me. And you're going to have this focus every morning on going after the good. What feels easy tends to correspond with those advantages. What feels forced is the better you know your rules, the more forced a trade will feel when you choose to break them. It's the weirdest thing. Your heart will race when you know you're forfeiting advantages. But this little historical study each morning, guys, what it does is it sets you up for the day, and I promise you, it will accelerate the learning. The second tab, let me open that back up. This is where you learn to be a chart reader, guys. This is one of the most valuable tools I think a new user can have as long as they do the drill. Each green section is what it looks like to have the rules met. Just the rule on its own, not a trade, not management, just nothing more than strong triggers, rule number 1. All it is a clear path, rule number 2. And then, guys, your entries. What it looks like to get into the market where the market is most likely to continue. Commit these looks to memory so that they become easy. And then I'm a firm believer that if you're going to be able to recognize strong triggers, it's imperative that you understand what weak triggers look like. You have to know what it looks like when your advantage goes away so that you can say to yourself out loud, scare the dog, frighten the cat, make the birds chirp. Holy smokes, I don't have a clear path. I need to sit on my hands and be patient because my money is worth those advantages. So that's the second tab. The third tab is where you're going to build your trading plan, your entries, your management, things you see, and things you should avoid. And this is a process, guys. I build my trading plan every day, and I've been with the software for quite a while now. Every day I try to learn something new. Every day I take a picture of something that I didn't notice before. Every day I look for ways to do it better. And that's what all these sections are for. You're going to fill these sections out and hopefully make them look like some of the work that I've done here. For the brand new user, up here in the light blue, these are the entry sequences for the high probability trend trade. When we talk about pinpointing your entries, this is broken down into steps individually, going through the whole thought process. Same thing with management. There's about 380-ish of the client's perfect trades, and it's important that you understand these are the client's perfect trades. These are the client's rules met. Not all of them are high probability trend trades. Some of them are even medium probability trades with a variance on a rule that you're not comfortable taking. That's okay. You can go through and study these and begin to recognize that momentum carries a lot of trades, that termination conditions stop a lot of trades. And it's a great study tool to commit some looks to memory. Management, we keep it very basic in the beginning, but you will grow with your management as you grow in your experience reading the indicators. There are patterns that repeat themselves, guys, over and over. And it's wild just how often you'll see the same thing. And eventually your brain will go, oh my gosh, I've seen this before. And let me go find more pictures and see if it's an advantage or a disadvantage. So there's a lot of stuff there. And then there's a whole section dedicated to termination conditions, those areas that are likely to stop the market, because this is the most broken rule among new users. My hand is all the way up in the air. This was my weakness in the beginning. I love to trade into lines that could have stopped the market. And honestly, it took studying the trades that I took. It took me posting in a class that I wasn't teaching yet, and getting the feedback from John Novak, the writer of the software, to be able to fix my desire to trade into these lines. So it was the constant feedback. And if you guys want, call it nagging. It's cool. I'll nag you a little bit. And I'll say things like, hey, Andy man, how many times are you going to break rule number 2? Hoping it works before you just stop breaking rule number 2. And Andy will be like, you know what? Mark's kind of a pain in my butt. I'm just going to not trade into termination conditions out of spite. And whatever gets you the victory, I'm totally cool with it. So guys, this is your path. Post a lot. Ask a lot of questions. Do not be okay with not understanding a concept. I can't stress that enough. Do not sit in silence if you don't have the answer that you need. I'll have it, or I'll find someone who does. And please keep it simple. Just keep it simple. I do know what the problem is, PFI, but I'm not at liberty to share it with you yet. The large chart must have strong triggers, guys. This is rule number 1, and it's rule number 1 for a reason. The large chart must have strong triggers. The big crowd must say that we're going in the direction of the trend fast. So what is the trend, guys? If it's green, the market's going up. We should be looking for rules to be met for high probability trend trades long. If it is red, the market is going down, and we should be looking for high probability trend trade short. You're absolutely right, PFI. Financial suicide. There's no reason to fight the trend, guys. The trend is the lazy river at the MGM Grand, and you can either try to fight it to go get your sunglasses 50 feet behind you, or you can grab a pina colada, float that circle, and just pick them up on the next round. It's up to you whether or not you fight. I don't have any rules. I don't have any rules that tell you guys to fight. So when the background is green, it's going up. Let's go up with it. When the background is red, it's going down. Let's go down with it, guys. And the only way I can have strong triggers in an uptrend is if both the small and the large triggers are both green. So the trigger lines are nothing more than moving averages. I'm not techie enough to know all the math that goes into them, but what I do know is that the solid lines are small triggers. They're a faster moving average. The large trigger lines are dashed, and they look different. In order to have strong triggers, and this is great for you brand new users, the background, the large triggers, and the small triggers must all be green. In a downtrend, the background, the large triggers, and the small triggers must all be red. If the colors don't match, that's your first red flag saying, hey, I don't have the advantage of momentum. And what it means to have momentum is that your small triggers have broken above the large triggers, that the large triggers are widening. They're angled in the direction of the trend. And when I have this strong look, and I'm going to take a picture of a picture here. When I have this strong trigger look, when I have a market with strength up or in a downtrend, smalls below the large, larger wide, space between, this is a market where the odds are favorable for the market to continue up, or the odds are favorable for the market to continue down. And guys, odds favorable momentum is the battle cry in this room. And you're going to see today how many trades win because of the momentum. How many winning trades are associated with this strong trigger line. And I want you to do this for you visual people. I know I've got some new folks in here. Josh A., welcome. Andrea, nice to have you. Think of scissors. And when scissors are open, there we go. There's your scissors. You can cut. You can get some work done. And the same is true going down. When the scissors are open, when the space is there, guys, you can cut. You can get some work done. So I want you to associate the thought of scissors open, odds favorable momentum. You're going to see it annotated on charts all day long, OFM. And when those scissors close, when the small triggers work their way back inside of the large triggers, this is a weakening of the large triggers, weakness of the trend, slowing of the trend. And when I have weak triggers, anything can happen up or down. And guys, I think that one of the most valuable tools you can use in the study process is to associate words for the rules with the looks, to put them together, to make them synonymous. So when I see this strong trigger look, I automatically think odds favorable momentum. I want to write on my charts odds favorable momentum. And anytime I see this weakened triggers, those smalls inside of the large, I say to myself, anything can happen up or down. This is where you begin to see bigger retracements, reversals, and this is when those key Fibonacci areas tend to hold with that weakness. So let's take a look at a live chart. There's a big chart, and I want you guys to see this. Excuse me. This was pretty cool. Weakness. Oh my goodness, excuse me. And look at that push down. Strength, the market continues up. It's really pretty basic. Strength, the market goes up. Smalls return to the large. There's a little retracement. Strength that pushes down. And guys, you see this over and over. Where strong triggers, excuse me, my goodness, break key areas. Where strong triggers push the market. I am so sorry. And strong triggers, guys, they'll even cover the mistakes that we make as new users. Excuse me, just 1 second. Sorry about that, guys. I promised my brother I wouldn't die in front of the class. So can you guys give me a why? And I'm a big fan of feedback. It lets me know that you're doing okay. Is everybody okay with the idea that separation creates strength? That when they come back together, that strength is gone, your advantage is gone. And if you learn to talk to yourself in terms of advantages, you should say out loud, I have momentum. I don't have momentum. Because we're not looking for trades. We're looking for advantages that lead us to the trade. 4 of you are good. I love it. Once you have strong triggers, we're going to make sure that we don't trade into areas that may stop the market. No termination conditions, guys. This is going to give us room to the profit targets. This is on the large chart as well. When we have no termination conditions, we have a clear path. Guys, I'm going to do a little side note real quick for my new users. Day 1 is literally like drinking from a fire hose. There's a lot of information that's coming at you on day 1. It's okay to not understand it. It's okay to feel a little overwhelmed with it. My promise to you is that by the 3rd or 4th day, you will be speaking our language and you will be catching these advantages. It happens all the time. I've been there myself. I've been brand new. I just want you guys to know that. Because usually, day 1, people are like, oh my gosh, I'll never get this. You're welcome, Josh. But I promise you, by day 2 or 3, the lingo comes in and everything is good. And you're like, oh my gosh, there's one of those entries. And there's people in this room that are in their first week or 2 that are already catching this trade and already learning how to manage it. And you just have to get over the hump of keeping it simple. Momentum, clear path, and an entry area. So feel free. Talk as much as you want in this room. Type as much as you want in this room. It's okay to be new. Termination conditions are nothing more than lines on a large chart, ladies and gentlemen. These are the lines that may stop the market. These are the lines that may create an untradeable bounce. These are the lines that could reverse the market completely, guys. And I want you to realize these are the lines where the people that move the market are making decisions. These are where buyers are buying and sellers are selling. Profits are taken and positions are entered, guys. And you know about these lines before you ever get to them. The lines could stop the market. The lines could break. The lines could create a fight. I'm going to give you a recipe to know what the most probable outcome is. So take a minute with these lines. I'm going to drop the picture in the room. Memorize what they look like. You don't even have to memorize the names, to be honest with you. But all of these lines could potentially stop the market. There are divergence highs. Divergence is a fancy way of saying, hey, there was a loss of momentum at this pivot. You see a pink line come off of it. Divergence lows. Guys, give me a Y if you can hear me, please. No sound. All right. All right, you guys have me? Am I back? I don't know what happened. My microphone just turned off magically. Crazy. Sorry about that, guys. Divergence highs, there's a loss of momentum. You're going to see a pink line. That's all it is. It's just a line. Divergence lows, there's a loss of momentum at a pivot. It's a blue line. Muser, stop messing with my microphone, man. Paul Flowers says it was you. I believe Paul. Fibonacci resistance. When the market is trending up, guys, this is a point where the market may stop, bounce, or reverse completely. Fibonacci support. When the market is trending down, the market may stop, bounce, or reverse completely at these blue lines. And then yellow 1-to-1s as well. And then, Andre and Josh, one thing you'll realize is this room is very much a community. And it's very laid back and it's very friendly. And you'll find that everybody in this room seems very, very committed. Yeah, Steve, I realized that. I had someone else tell me too. I had a setting on my YouTube studio that wasn't set, but I fixed it this morning. Andrea, am I saying it right? Is it Andrea? Andrea, I don't know how to correct me via typing. It's okay to be lost on day one. I'm going to give you all the help you can stand. It's okay to be lost on day number one. Let me show you just how normal it is. If I go to my browser and I start typing in DR, drinking from a fire hose is the first thing that comes up, because this is what I want to remind you guys. This is what it feels like on day one. Okay, awesome. This is it feels like a lot, right? Because you're learning new language. So it's okay. Just kind of sit back and soak it in. I always tell people that the first day, the first 2 days, what you're doing is you're learning how I teach. You're learning that it's okay to ask a lot of questions. You're learning that there's feedback on everything that you do. So the first couple days are really just an opportunity for you to see what we offer in the way of education. And please feel free to ask a million questions. And if you're shy, send me a private message. That's okay. I will answer them. But everything that we do is so foundational, and I try to keep it very, very simple. But even the most simple of tasks aren't simple on day one, right? How could they be? That's not fair to you. So give yourself a little grace. That's my wife's favorite word. Give yourself a little grace. By day 3, you're going to be like, oh my gosh, yeah, Mark, so I saw this momentum and it hit a line. And let me tell you about the entry I took. We will virtual high five and life will be good, I promise. So anytime I reach one of these lines, guys, decisions are being made. And this is the easiest way for me to remember and to respect termination conditions. These guys, this huge crowd of men and women with more power than me, every time they reach a line, a decision has the potential to be made. Whether it's an entry, an exit, a fight, who knows? So when price reaches the area, it sets off a decision-making process. When price reaches the area, the only thing that you guys have to do is just ask yourself, where are my triggers? Where are those same T3 trigger lines that established momentum? If they are below resistance when resistance is reached, this is a giant red flag that says, hey, don't go long into this area. You don't have a clear path. If it reaches support and the triggers remain above, don't go short. You don't have a clear path. And what's crazy, guys, and it's fun if you go back and look at your charts, is you will literally see Fibonacci resistance, and you can see on the most current bar the beginning of a little bounce. You can see that divergence high stopped the market cold. Support didn't let it go any lower. Andrea, do you see it? Resistance created a big bounce. Support stopped it. Look at how much the market was going down. Hit support, boom. So what we're doing is, if nothing else, we're scrolling back a little bit and we're learning to respect lines. And the very simple recipe that keeps us from losing our money trading into them. And then what you'll find is that when you start to couple these lines with a little bit of momentum, you're going to create a recipe that lets you know when they're likely to stop the market, when they have the potential to break, or when they're broken. So the first thing is to recognize that when you hit a line, just ask yourself, where are my triggers? So we hit Fibonacci resistance, the red line. Do you see how the triggers are below, Andrea? Don't go long into that area. Rule number 2 is not met. It's honest to goodness that simple. And then this area is either going to break or it's going to stop the market, but I have absolutely no idea which it's going to be. Nobody has ever sent me a memo and said, Mark, when you get to 63.50, we're just going to blow right through. Don't worry about it. So I just sit on my hands and I do nothing. And you can see how price is starting to creep through, right? So we're going to let it break, which means that we are going to use those same trigger lines again. It has nothing to do with price. And if both the small and the trigger lines get, and small and large trigger lines get below support, both lines of each, well, now the area is broken and support is going to behave as resistance. And if the small and the large trigger lines get above resistance, well, then resistance is going to behave as support. And then once again, if we go right back to that live market, you're going to see instances where that resistance broke, and look how the tail came right back to it like support. And that's where the bounce up came from. And this happens a lot. It's pretty cool. We break through all of these areas, and then they come right back to these areas. I'm telling you, these lines are not just on our radar. These lines are known and recognized by the people that move the market. And this is why the software is so advantageous for us. So what we're going to do is we're going to let it break. And it looked like it wanted to break for a second, didn't it? It looked like it was going to go through. And then just, I'll be darned, look at the push right off of resistance. And I'm telling you, if you keep it this basic, life is pretty easy. So James, all of your workspaces for the S&P, for crude oil, for gold, for the RTY, they are a 13.2 large chart and they are a 5.1 small chart. And that is just reference to the Renko bars, to what it takes to create a new bar. I'm not a very tech guy, James. I'm not sure how long you've been in here. And there's all this math, and I'm not good at math. I was an English lit major, ladies and gentlemen. So I make it even easier. There's a large chart, and there's a small chart. And Nexgen has provided you with the best of the best charts to be able to take advantage of these patterns in the time frames on the markets that we're looking at. But it's a 13.2 large, and it's a 5.1 small, but it's honestly, it's a big chart, it's a small chart. It's a large crowd, it's a small crowd. One of the great things about what we do, guys, is you don't have to know why to be able to recognize the patterns. You don't have to be able to build a watch to be able to tell time, and it doesn't matter if you can rebuild an engine, you can still drive to the store. And that's kind of the basis of this classroom, guys. I am not a tech guy, I'm not a math guy, but what I can do is teach you guys how to recognize patterns. So 2 options. Price reaches the area, the triggers remain above. I'm just going to sit on my hands and wait. I'm like, you know what? I don't know what's going to happen. Let me do nothing. And then if the smalls and the large get through the area, well, then the area is broken and the path is clear, and that path will remain clear until I reach the next line. And that happens. You're going to go through and the path is clear and you're super excited, and then it's going to hit another line. You're going to be like, oh my gosh, let's start the process over again. So is everybody good? Give me a why. I'm trying to keep it super basic, right? Either it's a clear path or it's not. And then Andrea, it's not an accident that the smalls and the large got above resistance here, and look at the bounce off of it. And this is where you just have to be patient. This is part of your 90%, guys. I can't go long into the area. I can't go short against momentum. I have to do nothing because I don't have any advantages. And this is the hardest part about being a day trader, is the idea that a lot of the times there's just nothing to do. We are professional waiters. And what happens is once you can pick off this advantage of a clear path, once you understand when an area is broken, it's going to set you up for your next trade. No, Josh, it has nothing to do with the bars. Everything to do with the triggers. And let me show you exactly what I mean. And we'll go through the whole thing. So the bars are nothing more than price. And as they come up, when they reach Fibonacci resistance, when the price bars reach Fibonacci resistance, if the triggers are below, that was the wrong little thing there. If the triggers are below, then it's just a big red flag. It says, hey, guess what? Don't go long. And what you'll notice is that the price bars get above here. But it's not until both the small and the large triggers get above this fib, that's when I consider my path clear. That's when it's time to look for the next trade. The bars reaching the area sets off the decision-making process, but the triggers are going to let you know whether the area is a termination, whether it's broken, and then what I was just about to get to, whether it has the potential to break. Does that make sense? And remember, this is day one, but keep asking these questions, man. These are great questions. In the very beginning for you guys, there's two options to keep you safe. There's either a clear path or there's a termination. It's just one or two. That's it. But eventually, you guys are going to be able to capitalize. We're using the lines to know where trouble are. So what I like to say, Josh, is the lines that are horizontal on the large chart, these are potential trouble. And these are the ones that we want to see clear. We use these moving averages, the squiggly lines, and those are what we call triggers. Triggers will define momentum initially, and the triggers will define whether an area is broken or not. So this line, let me see if I can do this. I love it when you guys ask these questions. And you know what? I'm going to back up. Hold on. Every horizontal line on your large chart is potential trouble. Potential. Does that make sense, Josh? If it's horizontal, it's an area that we have to be aware of. And then we'll use those squiggly ones, the triggers, to let us know whether or not the area has the potential to stop the market or whether the area has broken. And the price bars for the first time come into play is they have to reach that horizontal line. They have to either hit a red line, a divergence high, or one-to-ones. And when they hit that line, that's where the large crowd has the potential to make a decision, guys. Fights happen at fibs more often than not. So the line gets reached by the bars. You say, where are my triggers? And if they're below resistance, pump the brakes. Do nothing. Don't trade into that area. The area may stop the market. If it reaches an area of support, the price bars reach the area of support. Where are the triggers? If they remain above, sit on your hands. And then we take the price bars out of the equation, Josh, 100%. The only thing we use them for is that impact of the area. The triggers take over from there. And it's not until the triggers, not the price bars, break through the area. Then the area is broken, the path is clear. Right up until we reach the next area. And then we start the process over again. Does that help a little bit? Cool. And the reason we do that, Josh, is because if you thought you were going to take a long trade directly into that fib, That fib is ruining your good time. Price reached it. Triggers remain below. Nexgen users said to themselves, hey, you know what? I don't have a long trade into this area. It may stop the market. It might break. It could create an untradeable fight. But I know that the path isn't clear. And that's kind of what we're getting at here. Is just this simple recognition. And lines break all the times. And lines create bounces and little ricochets in between the two. So we keep it real simple in the beginning. Let them break. And here's a pretty good instance, almost like what we have right now. This fib breaks because the small and the large get above resistance. Resistance behaves as support. And then it reaches resistance, and we go back through the process. Price reaches resistance, triggers are below. And guys, this was taken in the S&P on the 15th of August, so 7 days ago. And the same darn thing is happening right now. Patterns repeat themselves every day. So what we're doing is we are finding the patterns that give us the highest advantage. So you'll also see times, and this is, gosh, this kills the new users because they're like, oh no, I can't do anything. Price reaches support and the trigger lines remain above. And in the moment, all I have to do is absolutely nothing. And then I get excited and it's breaking. And then I hit another line and I have to say to myself, damn it. And I swear at myself every now and then, it's okay, I'm a big boy. Price reaches support and the triggers are above, and son of a gun, there's nothing to do. And it happens again, guys. And there will be times where these key Fibonacci areas will be stacked, and you have to really exercise your patience. And you have to remind yourself, 90% of my day is doing nothing. But guys, the futures markets trade billions of dollars every day. We don't need to be in every move. Every tick isn't our tick. We want to be in the best moves with the highest chance of success. The purple line, are you talking about this one? Is the picture up? I'm only allowed to read one woman's mind, Andrea. And that's my wife's. Hold on. This one? I want to make sure that's the right one. Cool. Awesome. So this is what we call a divergence high. So when price goes up and then starts to come back down, if there's a loss of momentum, if the sellers steal the momentum from the buyers, you're going to see this pink line, this purple line print. And all it is it's this big thing that says, hey, guess what? There was a loss of momentum. Yeah. And what happens is these purple lines, these blue lines, which is the exact same thing going down, they become these crazy lines in the sand. And what they say is, let me go, there it is right there. Is right here, there was a loss of momentum. It can be magenta, purple, pink, whatever makes it easy for you. And then they steal the momentum and the market pushes down. And the buyers say, hey, guess what? We really want it to go up. And then, Andrea, when they get to that purple line, to the tick, this is the line in the sand that the sellers created. And look at the reaction off of it. And that's one of our termination conditions. That's one of those things where price reaches the line and the triggers remain below. And it keeps you from hoping that the market goes up. It tells you this is exactly where a bounce might happen. And it's to the tick. And this is the accuracy that you're going to have once you get this basic understanding. Does that help? Keep them coming, guys. There's your reaction. Isn't that unreal? You knew about this line. When did we learn about it? Like 11 p.m. last night. We knew about it. And sure enough, they couldn't break it. Not yet. We'll see what happens. So this is what we do. We keep it real basic in the beginning, guys. Accept that you won't be in every move. Just be cool with the idea that there's a lot of downtime. But what you'll realize is that Fibonacci gives you the ability to see where the driving forces in the market are likely to make decisions, guys. And this is why rule number 2 is so important. And very often, rule number 2 will keep you out of a consolidating market. Rule number 2 will keep you out of that chop, if you will. Andre, Josh, do you guys have trading experience? Perfect. Even better. I didn't either when I started. I got hung up on the idea that how the hell do I sell something that I don't own? So Josh, you're good. Andrea, you take the reins. But consolidation, if you've traded outside of Nexgen, guys, everybody's taken a beating in a market that gets rattled around for no apparent reason. You guys just discovered the reason. Fibonacci's right there, and man, they use it. So on the large chart, let me do this again. On the large chart, you're going to see momentum. You're going to see direction. You're going to make sure that there's no key areas. And when the rules are met on the large chart, that's when we turn our attention to the small chart. That's when we go to the refinement chart. This is where we're going to define our entries. But I want to ask everybody in the room, are you guys cool that those lines on a large chart are where we determine termination conditions? Those lines on the large chart may stop the market, may create an untradeable bounce, might screw up your good time. It's imperative that you know that it's the lines on the large chart that we're looking at, guys. And then sometimes when the rules are met, we're going to go to the small chart and we're going to be excited about that entry and we can't wait to take advantage. And we're going to see 3 divergences. So Andrea, your question about the pink line was very timely. Because if I see 3 of those blue lines from a low, or 3 of those pink, purple, magenta, whatever you want to call them, lines from a high, it means that there were 3 losses of momentum on a smaller, faster chart, on a chart that's going to show change quicker than the large chart can. And 3 divergences in the same price range, 3 times that line prints, means that it may terminate the trend. It may stop the market. It may create an untradeable bounce. Which means this is the only time on a smaller, faster chart where I will say to myself, rule number 2 is not met. I don't have a clear path. And if rule number 2 isn't met, I'm not looking for a high probability trend trade. 3 divergences. And you know, it gets even more powerful when those small triggers, when those scissors close and it turns into that anything can happen look. Guys, momentum is momentum no matter what you're looking at. And when it goes away, you're losing advantages. And it's even more powerful, and Josh, you may recognize this one, if it creates a little head and shoulders pattern. So we're taking one termination condition and we're actually making it even more effective with a couple different things there. But all you need to know as a brand new user is that if you see 3, no more longs, no more shorts. And then if they're not there, guys, let's pinpoint. Let's define exactly where the market is most likely to continue. Let's pinpoint exactly where the small crowd is most likely to fail. And we're going to do it with such accuracy that you guys are going to use a limit order. You're going to literally wait for the market to come to you. And it's pretty cool when you do that. You feel like a rock star. But on the small chart, your limit order will be placed at areas. Fibs, mid-bands, yellow, 1-to-1s. Areas on the small chart are where we expect a bounce to continue with the trend. Areas on the large chart create problems. But there's a caveat, if you will. We want those areas inside of triggers, inside of large triggers, guys, because large triggers, the market pulls back to them all the time. Check this out. The market pulls back to large triggers. It pulls back to large triggers over and over. It returns to the large triggers, guys, and this insanely cool phenomenon is what allows us to be so precise with our entries, because we've taken the large triggers from the large chart, your first time frame, and we've superimposed them on the small chart. So your small chart will actually look like it has 2 sets of large triggers. One is smooth. That one's native to the 5-1, to the small chart. You'll use that one to determine momentum. But then there's these stepped triggers. You're not my real triggers. That goes through my head every time. It had to fall out. And the step triggers, the synthetic triggers, are nothing more than the large triggers from the large chart. So what happens is price returns to large triggers. And if the large triggers from both charts that we use are one on top of the other, overlapping, two snakes riding piggyback, we're going to deem them favorable large triggers. Why are they favorable? Because this is going to reduce your risk. This is going to maximize your profit potential. This is going to create an unreal amount of precision. So for brand new users, you're going to hear me say all the time, your entry comes from a pullback, that fight created by the small crowd. Your entry is a pullback at an area inside of favorable large triggers. And I want you to get in the habit of writing that on your chart. Your entry is a pullback to an area, fibs, mid-bands, yellow 1-to-1s, inside favorable large triggers. And guys, the tighter the triggers are, the more precision, the least amount of risk. When they start to separate or split, your accuracy goes away, because now I don't know if it's going to pull back to the large triggers here or the synthetic triggers here. I've created 2 correction points. And 2 is more than 1, and it creates a little indecision, and it decreases accuracy. But when there's only 1 correction point, guys, great things happen for you. So favorable large triggers. All right, Mark, enough about triggers. How do we pinpoint? How do I get into this trade? So excited to trade. When the large chart has odds favorable momentum, when the large chart has a clear path, notice that I continually go back to rules being met. Guys, on your small chart, everything is going to be screaming up. And you're going to have what we call the fear of missing out. You're going to say to yourself, oh no, they're going without me. I'll never get paid. How am I going to pay my bills? My kid's going to have to drop out of college, and the dog's going to have to eat beans under a bridge. And then magically, more often than not, you get a reversal bar. The small crowd starts fighting. And guys, this reversal bar signals the beginning of the pullback, which is nothing more than a little push in price counter to the underlying trend. At the time of the reversal bar, and the reversal bar is not your entry, you're going to look for your favorable large triggers, large and synthetic. Are they overlapping? Is it 2 snakes riding piggyback, heading up and strong? Once you find your trigger lines, not your entry, you're going to identify the areas inside of them. Fibs, mid-bands, yellow 1-to-1s. There are no other areas that I look for. Fibs, mid-bands, yellow 1-to-1s. And you're going to create what I call the window of opportunity. And the window of opportunity for a long trade will extend from the highest point of support to the lowest point of support inside of favorable large triggers, guys. And I want you to say that every time you look for an entry. From the highest point of support to the lowest point of support inside of favorable large triggers. Triggers are where I expect price to come back to. The correction point. Areas are what I expect price to bounce off of. So if I'm throwing a tennis ball as hard as I can, I don't expect it to bounce until it hits something solid, guys. But here's the deal. As good as we are, sometimes there's going to be a range, right? And as long as price is in that range, your advantage is there. Once it goes beyond those trigger lines, once it gets to the wrong side of those trigger lines, your advantage is gone. Rule number 3 is not met. So any line outside, beyond the trigger lines, is not a part of the equation. The bottom of your window is the lowest point of support. But because of the momentum, because of the clear path, your entry, you will activate a limit order at the top of the window, a tick or 2 above the highest point of support, and you will hope and pray that that small crowd ate their Wheaties and that they're going to get you. And if they do, you're in the highest probability trend trade you could take. You have the advantage of momentum, you have a clear path, and you have just entered where the market is most likely to continue. So my hope is that for your first 20 days with me, you figure out how to find this entry. You go through the process every time. Odds favorable momentum on the large chart. Clear path on the large chart. Wait for the reversal bar to signal the fight. It's not my entry. Sometimes, and my wife did this, the reversal bar would print and she would hit sell. And then it would retrace all the way back to the area inside of favorable large triggers and she'd get stopped out. And the market would do exactly what it was supposed to do. So the reversal bar says, hey, the fight is on. The trigger lines say, hey, this is where we expect those price bars to return, but the areas inside are letting you know exactly where we expect it to bounce. Your limit order in this particular trade would be about 2 ticks below that mid band inside of favorable large triggers. Every one of these lines above the trigger lines, every one of these lines is where the market shouldn't go, guys. We don't want to be in a trade up there. It either gets us or it doesn't. And this is your entry for the highest probability trend trade. And once you can pinpoint where the market is most likely to continue, you understand precisely where the market shouldn't go. And your first stop, your stop placement, your protective stop, your, hey, I want to be out of this trade because it's not doing what it's supposed to do, stop, will go 4 or 5 ticks above those trigger lines. This is why favorable large triggers reduces risk. 4 or 5 ticks, guys, and if they get through everything and hit that stop, you're glad to get out of that trade. You're happy to no longer be in that trade. And anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I'm not trying to sell you something and tell you that you're never going to lose. Guys, you're going to lose. But the thing is, you don't have to lose a lot. And even more so, you have a set of rules that means you don't have to lose because you refuse to wait for advantages. And the cool thing is that with all those advantages, more often than not, you're going to see that reversal bar going in the direction of your trade, in the direction of the trend, in the direction of the momentum, in the direction of the clear path. And you're going to reduce risk a tick or two above that. And you're going to say to yourself, all right, now they got to come get me if they're going to come get me. But your risk is already reduced. And I'm going to tell you right now, Nexgen users show me trades every day with such precision on entries that very often, once that reversal bar prints, their risk is down to 3-4 ticks tops. It's pretty cool. And guys, managing your risk before you ever manage your profits, that's the sign of a mature trader. Managing your risk through the idea that odds favorable momentum is mandatory. Managing your risk by not trading into areas likely to stop the market. Managing your risk by patiently waiting for the pullback to the area inside of favorable large triggers, guys. When you couple that with a plan that's been proven to win more than it loses, that's your recipe for success. And that's why I keep it so simple in the beginning. 3 rules, 2 charts. Let's focus on learning what they look like so we can put them together to create a trade. The easiest way to do that is not to take a trade. And I want you guys practicing, right? Being on the simulator is exciting. Getting in there, watching the numbers fluctuate, the market moving. The easiest way to recognize these looks, to commit them to memory, to make them easy to catch in the moment, is to scroll back historically. And if you see rules met on a large chart, circle a tail if there's one present. This tail isn't what we trade, guys. This tail, that's it right there. It's the pullback. This pullback and then continuation creates the tail. And we don't trade the tail, we trade the pullback to support inside of favorable large triggers. But if you circle the tail and it lines up with areas inside of favorable large triggers, guess what? You have a high probability trend trade. You have a picture that you can commit to memory. And let's see, just for grins, if we have any of those tails. Are you kidding me? Did support stop the market? What are the chances? What are the chances? Pretty good. That's why we don't trade into Fibonacci support. So I'm going to circle this one right here. This was kind of in the middle of the morning, but I want to make sure that I'm at least close to rules met. And I'm going to go back on my small chart, and I'm going to see what that circle looked like. And this is one of those split trigger looks. This is one of those times when it does pull back to support, but it's kind of hovering right in between two trigger lines. The large are up here and the synthetics are down here. And guys, if you take this trade, it doesn't fit the rules for a high probability trend trade, but as you grow with the software, you might say, hell, I'll get in at this fib because I know that my stop belongs below these triggers and I'm okay with the risk with this level of momentum. And sometimes you'll do it, and sometimes you won't feel comfortable with it, and sometimes you'll even see the same pattern, but it's directly into a termination condition, but the pattern remains pretty constant. Price comes back to large triggers. So you've got to go through and you've just got to study it, and you've got to learn to trust it, and you've got to get those repetitions. And this is where the spreadsheet pays dividends, guys. This is where the spreadsheet, you can start clicking on those pictures and you'll notice the momentum and you'll notice the pullbacks and you'll see these things over and over. You'll see the momentum, right? You'll see the clear path. You'll see the pullbacks. And guys, I've even put, and Andre and Josh, I want you to realize this. When I tell you that you're probably going to lose a couple, this was the perfect trade. This was everything that we looked for. And it didn't work. Somebody with more money than us decided to make it not work. But this is the pattern, and that's why it made the spreadsheet. So, this is where I start giving gifts. And I give these every day. Most people ignore them for the first week, and that's okay. Guys, you don't hurt my feelings. But the first thing that I give out, the first handout, if you will, is Chart Reading 101, guys. And this is what goes with that 101 section that I showed you. To get to where you want to be the quickest, you've got to learn to read your indicators. You got to recognize these advantages. And the easiest way to do it isn't from taking a trade, but rather from going back and taking pictures. So this says take 25 pictures of strong triggers so that you never miss out on the advantage of momentum. And it reminds you to go take 25 pictures of weak triggers so that you don't confuse the two. The same is true with a clear path and terminations, and then finding those entries. If you go back through this, and it feels like a lot in the beginning, go do 3 or 4 a day. Start filling up that spreadsheet. Go look at the ones that I've taken on the spreadsheet. There's almost 45 pictures of strong triggers on there already for you. But don't just take the pictures. And I think this is the thing that I really want to stress. Talk about the whys. So when you talk about strong triggers, let me make this bigger. You're talking about the separation, right? My highest chance of success comes from this range. This is momentum. This is strong triggers. And if you create a connection between the words and the look, here we go. Strength. What is strength? Strong triggers, odds favorable momentum, rule number 1 met. What you're doing is you're just committing it to memory so you don't ever hesitate when it's time to find that trade. So a lot of people love to ignore this, and everyone that's ever done it has told me that they've had great results, and it's made it easier for them to find things in the moment. So recognize the looks individually, study them individually, and then learn how to piece them together. And then again, for my new users, trigger lines are the quickest lesson you're ever going to get. Trigger lines are pretty easy in terms of the study. And it's as you go through the other stuff, as you start to recognize termination conditions, it might take a little longer. And then the entry is the third rule for a reason, because that's the one that takes a little more precision. But I'm also going to give you this high probability trend trade checklist. And what this does is it defines in pictures exactly what it means to have the rules met. So is the market coming from a strong top or bottom? You're going to hear this a lot in the room. All that is, did a termination condition reverse the market? If it did, that's your highest probability trend trade, guys. But it tells you, you can take it without a strong top or bottom. You can take it without a good top or bottom. You're going to manage it. So odds favorable momentum on both charts. Strong triggers, weak triggers. I don't have to get confused on that. And then termination conditions. No termination conditions present. If price reaches and no triggers are through, the area is not broken. It's not a clear path. Rule number 2 is not met. If the small and large get to the other side, the path is clear. Let's look for a trade. And then, guys, that ability to recognize momentum through the high probability trend trade, your ability to recognize termination conditions through the high probability trend trade will open the door for being able to recognize when areas have the potential to break, guys. When your small triggers smash through an area, 3 to 4 points, but your large triggers are lagging behind. With this level of momentum, odds favorable momentum, this area has the potential to break. But it will never be considered broken until the small and the large. So Andrea, Josh, I'm going to give you a plan how to capitalize on the potential to break. But you've got to be good with the idea of whether it's broken or not so that you can identify that potential. And then finally, the windows of opportunity, exactly how to find them, where to put your entry, where it's not, where it is. All of this is for you guys. I'm going to give you everything that you need. And then I'm going to give you this one. This is my baby. I love this one. This is the KISS plan. The Keep It Simple Sunshine plan. And guys, this is a stepping stone in your learning journey. And I have to stress this to the new users that say there's not enough action with only the high probability trend trade. This is a trade. This is the trade that has more potential to win than lose. This is the trade that creates confidence. This is the trade that teaches you to read your indicators. This is a stepping stone. This is not your only trade. This is your first trade. Commit to it for 30 days. Get good at it. It's designed to optimize your chances of success with the high probability trend trade. It's designed to give you the best of the best chance to be profitable, to be consistent as a brand new user. That's right. I'm giving you a plan that can be profitable and consistent. And I've seen people get funded in these prop firms in their first 30 days with Nexgen by adhering to this plan. But then through simulation, through study, through class feedback, that it's underlined for a reason, guys, in continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. And I can't not read that snarky. That was my brother using AI to try and make me sound a little more professional. Guys, when you can read your indicators, you're going to see more opportunities. It's really that simple. But this is designed to keep you focused as a brand new user, to give you the highest chance of success as a brand new user, to teach you to read your indicators as a brand new user. And your simple plan for consistency. Guys, don't fight the large charts. This is my favorite picture. My brother wrote this book. And Andrea, Josh, if you don't know, John Novak is my older brother. He wrote the software. This is his company. And he's like Einstein. And I'm his silly, artsy-fartsy little brother, but I'm pretty good at teaching. So he does the smart stuff, and I teach you to read it. He wrote this book, How to Commit Financial Suicide in One Easy Step. In one easy step, PFI. Warning signs your friends are in trouble. They're trading against strong triggers. Strong triggers are established by the people that control the market, and it is crazy to fight strong triggers. You will lose more than you win. Chapter 2. Warning signs your friends are not paying attention. I love this, and it's very tongue-in-cheek. They trade into termination conditions. And this is meant to be funny, but it's also kind of a serious warning. Seek help immediately. I'm help. These are the two most common mistakes that people make that cost them money. These are the two most common mistakes that new users make that keep them from finding success, guys. And if you can commit to not fighting the large chart from day one, you've already eliminated about 60% of the problems that new users have, and really that experienced traders have. So the idea with the KISS plan, Rob, we all do it. I was so bad about it. My brother's exact words, Mark, how many times are you going to trade into those lines hoping they break before you get sick of losing? True story. That was the coaching that I received. Guys, you have to define your entry. And I can't stress this enough. Define where the market is most likely to continue. And it's going to allow you to know where to place your stops, guys. And it's going to create this confidence. And you're going to get really good at recognizing advantages. And then once you do it, here's the hard part. You've got to manage it. Because now you're in a trade. And you see that P&L and it's going up and it's down and it's giving you heartburn. And your palms are sweating, and all you want to do is get paid. And guys, I'm telling you right now, you will pucker a pleat right into your leather chair that's going to take professional help to get it out if you don't trust your plan. And that's why we focus on entries so much in the beginning, making sure that you trust the plan. But management is a direct result of your entry. Management is how you're going to do great things with that entry, and management is what allows us to really do all these things. So once you're in the market, once you've defined your entry, let your management as a brand new user be just as mechanical. And I'm telling you, this is going to help eliminate a lot of the emotion. It's going to help eliminate a lot of the fear. You're going to put yourself in an if-then situation. And the first thing is 100% dependent on your ability and your willingness to get into the market where the market is most likely to continue. Because once you've done that, your stop is where the market should not go. And there's only two options. It's either going to get hit or all of those advantages are going to come into play and you're going to get a reversal bar. And if you get a reversal bar, there's the if, then I will place my stop 2 ticks above it if it's a short trade, 2 ticks below it if it's a long trade. And I have effectively reduced my risk. And now there's absolutely nothing for me to do. I want you to sit on your hands, put them in the air, grab the dog and hug it, whatever you have to do to not move anything. And you're either going to go to your first target, and these are going to be predetermined, or your stop is going to get hit. And you will never be in control of which one it is. But remember, the only reason that we're trading, right? The only reason we took a short trade is because we had momentum and a clear path. That market is dropping like a Led Zeppelin. So it's either going to hit the first target or it's going to hit the stop. I don't know which it's going to be. But for you guys, brand new users, KISS users, I strategically put that first target at only $100. But Mark, I have to make more than $100. Well, silly, this isn't your only trade. This is just one trade, one entry, one opportunity. And once you hit that $100, it pulls that first contract off. Ninja Trader tells you that you're a badass. Children start to sing songs about you. Your palms stop being sweaty. The butterflies get out of your stomach, guys. And you're going to move your stop to break even. And nobody can hurt you anymore. You've made money and you have absolutely nothing to lose. And this puts you in the mindset to trust, to hold on for that second target, to get to that second target with no fear. Guys, you can't lose at this point. And your second target is only $200 from your entry. Come on, second target. Let me try that again. Your second target, that was the worst transition ever, right? Something's gone awry. I can't open the picture. All right, one second. I'm just having fun here, guys. Don't mind me. There we go. Your second target still won't load up, dagnabbit. Your second target's only $200 from entry, guys. Which means worst case scenario, if you hit the first target, you made $100 and shut it down. Best case scenario is a brand new user following the KISS plan as it becomes a $300 trade and you don't get to see it because it refuses to load up. But $300 is freaking amazing. $100 adds up, and I'm going to give you guys this too. Daily goals. If the best you do every day is $100, guys, you add $25,000 to your bottom line at the end of the year. If the best you do every day is one high probability trend trade that follows through on that KISS plan and makes you $300, guys, that's $75,000 a year. And I don't care how much you make, an extra 75 grand doesn't suck. But the thing is, that's one trade. That's 3 trades that get caught break even. The more you grow with the software, guys, the more experience you get, the more you recognize patterns, and the more you are capable of adhering to rules. So that when you enter the market, you're trading a pattern that wins more than it loses. You'll find that $500, $700, $1,000 a day is not unrealistic. But you've got to learn the process that yields results. And that's what I do here. And this is why I don't really talk about the money in this class. I talk about the process that yields results. You'll find the money through the process. My job is to teach the process. So I'm going to give you guys this too, so that you can look at it and say, oh my gosh, I don't have to make $1,000 every trade, Rob. I can get paid at lines 2 or 3 times a day, and then I'm done. And then I go do whatever it is I want to do. And then one more thing I'm going to give you. I love giving you guys everything you need. Exit conditions. So new users, new traders. The money shows up, Tom. You know what? It's if you play golf. I don't know if you play golf. The desire for a great score never produces a great score. But the process of hitting the ball correctly typically does. I played golf yesterday. Gino in this room is my golf coach. He doesn't really know it, but he is. And guys, I've been working on my swing. I've been working on the process that yields results. And I went out yesterday and I only hit the process about 50% of the time. And for whatever reason, I couldn't get my brain and my body to do the right thing every time, which is normal when you're learning something. But every time it was, Gino, you'd love this. I was crushing the ball, and I was crushing the ball straight. And it was the process that kept me moving forward. It's the process that gave me those great shots. Venmo, please. And that's it. Slow it down. Let your brain catch up. And that's what we do, guys, is we slow our brains down and keep it simple. And it works out. So you have to know when you go live. And you won't know when you're brand new because you're learning. That's cool. But before you start risking your hard-earned money, you need to know why you will enter a trade. And you have to know why you will exit. And I've made this very simple for you in the beginning by giving you the KISS plan. And I encourage you guys to commit to having the rules met. Commit to following rules. Let there be no other option. Either your rules are met or they're not. Because it's the maybes, the hopes, I wish, I want, it might, it could. Those are the ones that tend to cost people money. And the biggest difference between successful traders and the traders that struggle are the people that are capable of doing nothing. When there's nothing to do, those are the people that find consistent success. So the more consistent in action you become, the more consistent in profits. And your process yields the results. And guys, the rules pull the emotion out of trading. You're like a robot. You've got to be. Trading is not your adrenaline fix, guys. Go jump out of a perfectly good airplane. Go swim with sharks. Go, I don't know, pick a fight with someone twice your size. Whatever gets the adrenaline up. Let trading be mechanical. And if I'm in a high probability trend trade, the first trade, the foundation trade, as a brand new user, the KISS plan rules. That's it. But I will create a plan based on my ability to read the indicators, and then I'll begin to recognize reasons to exit a trade. And if I start taking more trades before I'm good at this one, I may confuse entry rules. I may confuse exit rules, which means that I open myself up to making mistakes that can be costly. So get really good at one thing, and then let that carry you to the next thing. And what you'll find is that trading becomes very low stress. Price reached Fibonacci support. None of the triggers broke. They were weak. Look at the bounce. Odds favorable. Potential to break. I wonder if anybody's going to show me this one. You took that one, Tom? So, Andrea, Josh, Tom's on day 8. He took this trade. On day 1, he was wondering what the hell was going on. Pretty cool, right? I will. I get to it. That's the second half of the day. So we just made it through the first half of the day, right? We just made it through the first half of the day. Second half of the day is where I'm going to look at what you did. And Tom goes back to every chart as a brand new user because he follows directions. He defines his momentum and his path. Not a clear path, Tom. It's a potential to break. Does that make sense now? Price pulled back, wanted to put a buy limit, you wanted a sell limit right at the mid band. But it reversed, so you got in on the reversal bar. That's okay. And then you rode that momentum and you made your money. And Andrea, this is it. Rinse and repeat. Josh, this is it. Rinse and repeat. And you will go from being very, very focused, and then you will find more opportunities outside of it. But that's a weekend. 362.50. Shut it down, right? You just made $75,000 a year. At least put yourself on pace. That's one trade, and he's done by 10 a.m. And this is what we're doing, guys, is we're just giving you the ability to recognize patterns that win more than they lose. So I'm going to give you right now, I'm going to give you Chart Reading 101, Daily Goals, Exit Conditions, High Probability Trend Trade Checklist, the KISS Plan, and my PowerPoint. Every picture that I used to teach with. And that all just came in the room. Download them, click them, drag them over to your desktop, whatever you need to do to make them yours. I'm also giving you my spreadsheet one more time. You have access to everything. Everything. And yeah, Tom, it was the potential to break, but not broken until the smalls and large get below. And then, guys, look at this. Another example of a big blue line, stopping the market cold and reversing it. If you see this enough, you learn to trust it. So, Tom, there's so many fibs. I like it. Andrea, my goal is that you just show up every day until you fire me. Until you say, you know what, Mark, I can read my indicators. I'm just going to go trade. Maybe I'll pop in and say hello because you're so damn charming. That's the goal. My goal is to get fired. And then, Tom, sometimes there are a lot of fibs, right? Sometimes there's a lot of stuff in the way. But if you are patient, if you wait, if you insist on advantages, Tom, what you realize is that I don't know what time frame you're in. I was wondering if anyone would catch that. They're in the room, Spur. So guys, what you can do, let me pull my room over. Whoops. My chat box over. So Spur, what you can do is you can download them right here, or you can just click them and drag them right over to your computer. That works as well. And if you need more help with that, feel free to send me your email. I'll just email them to you. You want to know something cool, Andrea? It means the same thing as it means over here. It means that there was a loss of momentum right at that pivot. And it means that there was a loss of momentum right at this pivot. It's the same thing. This resistance is that resistance. And these yellow 1-to-1s are the same kind of thing as these yellow 1-to-1s. And the only difference is that here we're going to use them to define trouble. Over here, we're going to use them to define entries on that smaller, faster chart. Let me show you that refinement process. If I pull this up a little bit and I circle or put a big square around that one bar, look at how many bars on the small chart fall inside of that one bar. That's what helps us. That's what helps us pinpoint, is by breaking down this overall look into this smaller, faster look. So there's a lot that can go on over here. And let me do it over here. And then, James, I got your question in 1 second, man, I promise. So if I pull this square over, come on. I got the carpet tunnels. And I put it around that one bar that Tom entered on. You can see that inside of that one bar, there was a pull back and a push down. And right where that circle is right at his entry, right at the top. And it's this refinement process that allows us to reduce risk and maximize profit potential. And it's kind of cool the way it works, because notice how on the large chart, the momentum never flickered. And on the large chart, that potential to break stayed constant. The large chart doesn't move a whole lot. So we capitalize and we take those smaller moves, because that's what helps us reduce our risk. And that's what helps us, because from here to here is 2 points. But from here to here is suddenly 8. And that's how we're able to do it. All right, James 53:219. Probably a dumb question. Absolutely no such thing. While you're talking, I'm on NinjaTrader. Never used it before. How are you getting your time frames? You don't have the option of a 13.2. So James, awesome. Thank you, Andrea. And just so you know, I've made every mistake that you will ever make. I promise you that. Most of them I've made 500 times. And that's actually how I came to teach this class, is when I first started with the software 4.5 years ago. COVID had shut everything down. I had just had my second spine fusion. I couldn't go back to my career because it involved me being on my feet. And I started learning the software. And one of the things that frustrated me to absolutely no end, and I don't mind saying it, my brother is brilliant. But for me, it was like Einstein teaching string theory to third graders. I couldn't keep up. I couldn't follow. There were a lot of assumptions, and things that were deemed obvious weren't. So when I was trying to figure out what the hell I was going to do with my life, my brother goes, hey, why don't you teach a 101 class? Why don't you take these very basic concepts, break them down, and teach people to read the software? I think that would work. So I started. So everything that I did and everything that I do comes from the assumption that brand new users don't know anything. That you don't know the difference between a fib and a midband and a one-to-one, because I had absolutely no idea. That you don't see momentum in the moment because you're brand new. That you don't say to yourself, oh, this area has the potential to break, because how freaking could you, right? So I keep it super basic, and I count on you guys to make mistakes and post them in the room so that I can give you the same feedback that I got in a different manner and get you where you want to be. And I promise you, everything that I do is 100% dedicated to simplicity. Everything that I do is designed to give you the path of least resistance. Rob, did you notice that when price hit that mid-band, the large triggers didn't follow? Do you guys remember when I said price loves to come back to the large triggers? This is what we call the gap theory. This is the only time when a mid-band is a termination condition. When the large triggers refuse to follow and there's room to make a whole bar. Rob, there's your gap theory again. All it says is don't go long. It's a termination condition. That's all it means. So I am pleased as punch to have you new guys here. And I'm so excited to do this with all of you guys that are in here. And then James, are you ready, James? Let's go through a little NinjaTrader 101. If you're cool with it. You got a moment? So when you open up NinjaTrader, you get this bad boy, right? No problems getting here. And this will be good for all of you guys that are new to NinjaTrader. And I'm going to do two things, guys. I'm gonna give you a fish, but I'm also going to teach you to fish. If you go to the website, nexgent3.com, and on the drop down, if you go to the software guide, this is all of your NinjaTrader how-to. This is how to open workspaces. This is how to close workspaces, how to scale charts, how to put in stops, targets, all that good stuff. I will talk about every bit of it in this classroom, but if I'm not here, that's your go-to. So, James, you open up, and you should be connected to data. You should have a green dot down here in the bottom left-hand corner. So if you don't see this green dot, you have to go to your connections and make sure that whatever connection you need to be on, whether it's your demo, your simulation, your live, your NinjaTrader, whatever, Kinetic, make sure that you're connected. once you're connected, go to workspaces. And I've dropped mine down because I've got a little bit of OCD, James. But there's about 10 options in here for workspaces. It's all right, Pete. It always happens. So James, under workspaces, you're going to see Nexgen crude oil. You're going to see Nexgen S&P 500. These are the ones that I teach on every day. These are the markets that tend to be the smoothest, that move at a pace that's easiest for people to follow. The patterns definitely happen on these. The rules are true, and it's easy to follow. So James, you're not looking for 13 twos. You're not looking for 5 ones. If I click on a workspace, and I'll open up gold so you can see the process. I click on gold, and then 2 charts come up automatically. And all the calculations start to run. And you literally watch Fibonacci areas build. And you literally watch these things come to be. And you can see that it's calculating. And when you open your software, man, it is doing thousands of calculations. And it's creating these lines from thousands upon thousands of calculations. And once it says it's no longer calculating, guys, check it out. Fibonacci resistance held the gold market, and that's what started pushing it down. And then there's one of those tails. We'll see what it looked like. And sometimes, guys, when you open up a workspace, you're like, dude, I don't have any price bars. Everything is red. I don't get it. Click this F. It'll bring you right back. And now I've got the small chart too. So James, what you got to do is you got to open the workspace. You don't even have to build charts. Nexgen did all the work for you. And then can I get either a yes or an amen or a hallelujah or a preach? Odds favorable. Price didn't reach the red line. And it pulled right back to a mid-band inside of favorable large triggers. And good gosh, it went straight to that red line. And that's kind of cool because I don't teach on gold. But guys, I just opened it and the pattern is exactly the same. Josh, do you see it? Andrea, do you see it? There's your pattern. This is all you're learning right now. So, right on. I love doing this. Large chart says up. Large chart hasn't reached an area. So I turn my attention to the small chart. And the small chart's going up, guys, and I'm nervous. Is it going to go without me? And then it gives me a reversal bar. And at the time of the reversal bar on my small chart, I'm going to look for those triggers from the top of the triggers to the bottom of the triggers. And I'm going to say to myself, where are my lines inside of those triggers? I'm going to refine all the way down to this one mid-band right at that bottom line. And what I'm going to do is I'm going to right click on my chart. Well, price is down here, so it won't happen. And I'm going to put a limit order a couple ticks above that mid band. And I'm going to hope that the small crowd gets me. And it's going to start to come back, and I'm going to get excited. And notice that my mid band's coming up. Maybe I go up a tick. And oh my gosh, they didn't get me. No, we're not trading the wicks, Josh. Do you see? This white line represents my order. Notice on the large chart, there is no wick. It's just everything screaming up. The large chart, Josh, tells me that I have odds favorable momentum because there's a separation between the small and the large triggers. The large chart tells me that I have room to my profit target because price has not reached an area. My large chart rules are met, and this is exactly what it's going to look like, guys, when you're looking to take a trade. There will be no tails. There will be no wicks. Price is literally all the way up here when it's time to look for an entry. I've defined my area inside of triggers, and it's one line. It's a mid-band. And those jerk faces missed me on the first run, guys. They didn't get me. And if I just jump in because I'm afraid that these patterns aren't going to repeat themselves, watch what happens. They go, oh, I'm sorry, Mark. Let me come get you. right at the area inside of favorable large triggers. And then once I'm in at areas inside of favorable large triggers, right at that line, Ollie, 1, 2, 3, 4, 5 ticks below the bottom of those triggers where the market should not go. And then Josh, absolutely, if you wait to sell the market on a green candle, it's already going against you, brother. It's already on its way up. So we're going to buy the market when everything is green. We're going to go with the flow. Everything says up. Everything says strength. Everything says that there's room to make money. Your small chart may have a red candle. Can you guys see how it pulled right back to the only line inside of favorable large triggers? Who cares, Kurt? What does the momentum say on the large chart? That's okay. You have to ask that question over and over and over. Because you have to remind yourself that momentum is defined on the large chart. This loss of momentum, Kurt, thank goodness. That's what pushed us back to the line inside of triggers. That divergence, one divergence, thank goodness. That is what got us back to the line inside of favorable large triggers. But look, the large chart is screaming. And then my initial stop, Ollie, 5 ticks below the triggers where the market should not go. My risk on this trade, actually it should go about right here, is about 8 ticks, about $80. That's all. That's my whole risk. And then the magic happens. I get a reversal bar from my entry. And now my risk is 2 ticks below it. 1, 2. So I am literally 5 ticks of risk on the highest probability trend trade that I can take. Are you guys with me so far? And then Josh, check this out, brother. If I put that square on the bottom right at my entry and I click over 1 on the large chart, boom, right on the tail. That's how you're going to study. We're going to go back historically and see these tails, but we're going to make sure that they line up with areas inside of favorable large triggers. So guys, if I am in at 11.5, $100 is right here. You know what? Let's make this bad boy the color of money. My $100 is right there at 12.5. Where's my $200? My $200 is at 13.5. So we're going full KISS plan right now. We're going full KISS plan. Odds favorable, clear path, pull back to the area inside of favorable large triggers. Initial stop, 5 ticks below. Let's make our stop red. I love colors, guys. Colors help. I'm a little artsy fartsy. Once I get a reversal bar, Ollie, if I put my stop where the market shouldn't go and it's 15 ticks of risk, then I risk 15 ticks. How easy is that? But Ollie, here's the thing. If you have odds favorable and a clear path and a perfect entry, are you really worried about 15 ticks? Probably not. But Ollie, if you're trading directly into a line or you don't have momentum, 15 ticks should scare the hell out of you without advantages. My initial stop movement is 2 ticks below. 1, 2. So that 10 ticks, 11 ticks just turned into 5, Ollie. Look how close I am to my first target. Took 4 bars. I am out 1 contract. I'm up $100. And guys, now I have absolutely nothing to lose. Are you following me? Large chart said momentum. Large chart said clear path. Small chart brought me back to an area inside of favorable large triggers. I already made $100, and with all that momentum, it didn't blink all the way to my second target. And check this out. This one bar, inside of one bar on the large chart, was my pullback, was my entry, was my first target, and one tick below my second target. And this is why we use the refinement process, guys. The large chart never changed. The large chart never changed. Kurt, this is why we define momentum in areas on the large chart. From 13.4 to 14 is $60 worth of potential profit, guys. That's it. From a pullback to support inside of favorable large triggers is 250. So it's kind of cool that we were able to do this. And then James, sorry I turned your Ninja Trader lesson into a full entry lesson, but does that make sense, everybody? This is all we study for the first hour. This is all we talk about in the first hour, the second hour, the third hour, for the rest of your life until you get good. From fib to fib to fib. Guys, fibs rock. Learn to trust them. From fib to fib to fib. Learn to trust them. Right back to the line inside of triggers. Are you kidding me? I can't even make this up, guys. Ollie, your stop was 5 ticks where the market shouldn't go. It kept you safe, and you rode that momentum all the way down to the fib. This is why when it's perfect, I don't care if it's 12, 13, 14 ticks. It's worth it to me because my chance of success goes up exponentially. Guys, that's gold. I don't even teach on gold. It's not usually that well behaved. All right, I've got to stretch my legs for a second, guys. I have to take a break. So when I come back, we're going to click on the charts that you guys posted. We're going to talk about momentum. We're going to talk about a clear path. We're going to talk about your entries. Yeah, Andy, it's because I wanted to show how to open charts. I encourage you guys, stand up, walk away for a second. Go do anything other than stare at your charts if the rules aren't met, because you'll begin to fabricate rules. So go stretch, pet your dog, get a snack, drink a Coke, whatever you need to do. I'll be back in about 2 or 3 minutes, guys, and then we will get going for the rest of the day here, and we'll finish strong. Oh, no problem. Andrea, I hope it's a good meeting. The first hour will be the same tomorrow. Review it. And if you have any questions, you can direct message me here, or you can email me. Guys, I'm always open if you have questions. Don't be shy. I'll see you in the morning. Have a great afternoon. And guys, I'll see you guys in about 3 minutes. I know everything, Andrea. Mark told me you guys would be here. I think it's cool when husband and wives go in. He'll teach you. You'll teach him. You'll teach him before it's all over. The wives always tend to finesse a little more than the husbands. My wife is the exact same way. I'll see you guys in a few minutes. runs over, it means we're doing good things. So let's get right back to work, guys. I'm going to start clicking on charts. I'm going to start looking at what you guys are doing, and we're just going to talk about momentum. We're going to talk about a clear path, and we're going to talk about entries, guys, and that's it. I'm not going to judge you. I'm only going to point out momentum, path, entry. And then Paul, no clear path. And Paul chose not to take the trades, and ladies and gentlemen, the market bounced up from there. Great job, Paul, sticking to your rules. And then here's Pete. And guys, just a disclaimer. Pete's been with me for a while. Pete's trading plan will not be your trading plan. But Pete's charts are great because he talks on them. He talks about what he sees and what he's thinking. And I'm telling you right now, guys, this is the key. So Pete has it. He goes triggers up, strong separated, odds favorable momentum, clear path, and he calls it Big Mo, momentum, the Big Mo. I love that. And Pete, the JTFI, I love that that's getting pulled into the vernacular. He just jumps in. He says, I have the strongest triggers and the clearest path that I have ever seen on God's green earth. And I'm just going to jump in and ride that momentum up to the fib because I know where the market may stop. And great way to end the day, over twice his daily goal. Pete made $3,400 yesterday. Nice job, Pete. What a great day, dude. And then, I love this. Pete's like, Mark, let me just give you the lineup, everything that I did. And let's talk about it in front of God and everybody. So, first chart. Weak bottom means that it wasn't a termination that reversed the market. Odds favorable momentum, without a doubt. Odds favorable momentum. And Pete trades directly. Jump the fudge in, Tom. Jump the fudge in. But he didn't say fudge. It was the F dash dash dash. Did you get called for fudge? All right, so directly into a termination condition. And Pete does it. Pete does it. But Pete's breaking rule number 2. Pete's got the reps to accept risk. And I think it's crazy, but that's just me. He jumps in, and he gets paid right at that line. And then Pete, I think that's the one you could do without. So close without any room to make any money if it holds. But then when it pulls back, he goes, wait a minute, everything's still screaming. Let me see if I can capture a little more. And guys, one of the things that you're going to notice on charts that appear to break the rules by the people that are good at it is they're not greedy. They're not hoping stuff breaks. They know full well that they're trading into areas and they're getting paid quickly and getting out of the market just as quick. And then when it breaks, he just takes a pullback to support inside of triggers and finishes the move up to fibs. Daily profit goal hit at the beginning of the day. Guys, that is 4:21 a.m. daily goal hit. 4:21 a.m. daily goal hit. We got to find Pete a hobby, though, because he's like, you know what? Let's keep making money. That's the same one. We saw that one. Weak triggers, and that's where his final exit was with the weak triggers. And then when the divergence prints, he chooses not to re-enter with areas on the wrong side of everything. 2 divergences, weak triggers, no areas inside of favorable large triggers. And Pete says, that's not my money. I don't have to wish and hope and pray that stuff works out. I just have to follow advantages. Directly into a termination condition. From a termination condition, once again, there's rules that Pete follows that aren't ours. And when the market reverses from a key area and creates momentum, he's willing to take a shot. He knows exactly where the market shouldn't go. He even tells you that's where his stop is. And then when it doesn't go, he gets out. Break even. No harm done. But if this one goes, holy smokes, it goes a long way. You thought it didn't work, Rob? I love it when people think this is all crap. I absolutely love it when people think that everything I say every day is utter nonsense. Because if you take the time to do the work to prove me wrong, you'll be with me forever. You will be with me forever. All right. Did you take another shot at it? You did take another shot at it. Break even, stop out. I'm a big fan. Just let it break. Pete's got a little different approach, but great trading, Pete. Great profits. Love it. Love everything about it. And Pete, I love that you left and came back, right? Pete left the class, did his thing for a while, came back, started posting, started getting a little feedback here and there, little accountability, put him in a good spot. Steve Diego. It's just fun to say. Just fun to say. Steve Diego says, you know what, Mark? I'll go short directly into a termination condition. Strong top, strong triggers. No, not gap theory. Steve, are you with me? Right here? Are you in here? Let's blow up the large chart. Those large triggers are not a full bar away, brother. This is not the gap theory. You're the mid-band, but this fib, those are 100% termination conditions. That's that little financial suicide. You just got set up, you reacted with the fear of missing out, and then on review, prairie dog triggers, not even prairie dog triggers, no clear path, 2/3 of the advantages missing in his trade. Split triggers, entered at the top of the large, and even on a mistake, Steve gets paid. Even on a mistake, Steve gets paid. So, Steve, we're all going to do it. We're all going to see it after and go, whoa, I might have not done that the way I was intending. But your ability to react quickly, your ability to understand patterns, it worked out. So nice job. Guys, I'll always look at the good and the bad, but I'll always look for a reason to praise you on what you've done. And Steve, great management on a lower probability trade. All right, Pete. Everything says up. Triggers are up, not really odds favorable. No clear path. Perfect entry. And quick management once again. Doesn't have to be a home run. He knows he's trading into trouble. He's like, let me just make a little money real quick to pay for commissions, and then I'll move on and look for the next trade. Pete, are you the only one trading today? Termination condition. And that one whipped his ass. Pardon my French. Termination for the win. I like... Let's cover the annotation, though. Broke my rule and I paid for it. Guys, this is one of the most powerful things that you can write on a chart. Broke my rule and paid for it. Broke my rule and it didn't care that I wished it would have gone down. And Pete knows what he's doing, and he knew what he was getting into, and he knew exactly where that trade may not work. And he took a shot, but he broke his rule. Should have waited for the reversal bar, and you never got it. This is the second half of getting where you want to be. Understanding what it looks like to have your rules met, understanding what it looks like to not have them met, and then when you break them, going back and talking about what it would have taken for you to follow the rules, because all it does is reinforce the rules. I'm telling you guys, you could steal every one of Pete's charts and learn 1,000 lessons through his annotation. And I lost my space. Hold on. Cheetah. Let me make sure, Pete, I didn't miss one, did I? I did. I almost missed that one. It was so close, man. Look at that. Rule number 2. Just an observation on how important triggers are. You would think that 4 divergences, no more longs, you could take a short. But the triggers don't agree yet, and you would have gotten rolled over. Amen. Once again, there's not a trade on this chart, guys. There's only an amazing observation that's going to pay dividends later in life. Great job, Pete. Cheetah. Odds favorable. Clear path. Pull back to the mid-band right at the triggers. Got in at the area. Took profits at the divergence. Cheetah, outstanding. And that's true, Pete. When you go live and you're breaking rules, the pain is real. So if you're practicing without rules on simulator, you're setting yourself up for some long-term failure, guys. Man, Cheetah, awesome patience or total avoidance? Did you get beat up in here at all? You don't have to answer. Nope. Beautiful. Was it worth the wait? Tom, I want you listening. Cheetah, was it worth the wait when there were so many darn fibs? Hell yeah, it was. Every time. Every time. Guys, 90% of your day is being patient. 90% of your day is doing nothing. 90% of your day is wishing that those darn advantages would show up. But if you know your patterns, you don't hesitate. Great job, Cheetah. Awesome job. Andy Man. Na. Missed the easy one and decided to just jump in directly into resistance. That old fib update. Just jump in. Make a little money. Make a little money. Only after it was going up could you know it was going to go up. You didn't know it was going to go up. Why not the entry right at the area, right inside triggers with everything up, the perfect trade? Why did you skip that one, Andy? Can I assume that you just weren't in front of it? And guys, this is one of the things, and I'm not beating up Andy. Nothing but love for Andy. But when you miss the easy ones, you have to ask yourself why. Why am I missing the easy ones? Is my brain starting to rattle around some crazy ideas? If it starts to go up, I can jump in. If it starts to do this, I can take a super high risk entry. If it starts to do this, maybe it'll continue up. And you get so focused on the nonsense that you forget to follow your rules. I see that a lot with newer users when you start to see what the market is telling you. And that's why rule adherence, guys, focusing on the rules being met pays huge dividends. Because you catch the easy ones. And it becomes easier to avoid the nonsense trades when you've caught the easy ones, when you're getting paid on the easy ones. Divergence prints, not your rule. That's okay. I love that. It's just not your money. Divergence on that potential to break. Andy chooses not to take it. And man, it's hard when you see that happen after your rules aren't met. And it will happen just to test you. And then we talked about yours, Tom. Ollie, let's see what you did, my friend. See, Deb, we got an amen in there. I'm not sure why. But I like it. This was a tempting potential trade. Large chart rules were good. Triggers were overlap, but mid-band was outside the triggers. So you chose not to take the trade. Ollie, were the large chart rules met? Yeah, 90% waiting, without a doubt. 100%, not a potential to break, but a clear path, 100%. Here we go. I hope I have an entry look. So one of the things that when it's perfect, Ollie, when it's perfect, and let me type all this out. When rules 1 and 2 met perfect, best of the best, right? Rule 3 is not. is this a time, and I'm not telling you how to trade, and I'm not trying to create your plan, is this a time where a reversal bar might be worth a shot? If the large chart is odds favorable, if the large chart is clear path, and the only challenge that you're facing is that that mid band is on the wrong side. And guys, this happens sometimes, and you have no idea if the mid band's going to stop it. But you can wait for a reversal bar. You can say, hey, you know what? If the buyers jump back in, if the buyers give me a reversal bar, what does this do for me? It makes them start to move that direction, but it also establishes my risk instantly below that reversal bar. So, Ollie, maybe the next progression in your trading plan as you grow with the software. If the large chart truly is amazing and you want to go with that direction, that trend, that clear path, but your entry isn't quite right, let it get to that area that's not inside of triggers and maybe enter on a reversal bar. Go back and simulate it. Go back and study it a little bit and make sure that you're comfortable with it. Don't do it because I said do it. I may have been drinking this morning. There's no telling. But that's just the stuff that we think about, right? Because the goal is to get paid, and there's a lot of great opportunities that just aren't perfect opportunities. And you'll find ways to capture them, and you'll find ways to do it while still minimizing risk, while still giving yourself the best opportunity for success. So is good luck if the large chart was perfect, Ollie. It'll work its way into your plan eventually. They always do. You just start seeing patterns so often that you're just like, man, I can't not take this. Gino, odds favorable. And you're trading the NASDAQ. So everything's up, potential to break, and you chose not to fight those triggers. Gino, rock star, brother. NASDAQ's different, guys. NASDAQ is a different animal. Remember when we said that the crude oil S&P is a 13.2 and a 5.1, smaller, tinier? Guys, your NASDAQ, in order to slow it down to make it tradable, is a 34. It is 3 times larger than the 13. And your entry chart is the same chart that we use as a large chart. So these small triggers carry some weight. And man, you nailed it. Dead to rights, Gino. You didn't fight them. And you waited for the small triggers to turn. And you took the most beautiful continuation entry. And then you jump ship. But you got paid. Nice job, dude. 1 in a row. You know what? Every great run starts with the first one. Nice patience, though. And then here, everything says up again. Odds favorable. You wait for the close on the correct side. And it makes it pretty easy, doesn't it, Gino? And this is the NASDAQ trick, guys. Don't fight those small triggers. Get in on the right side of it. I told you it would change your life with the NASDAQ. Once you accept that, it'll change your life with the NASDAQ. Great job, dude. Great job. Venmo. Buy stop orders. I love them. On the NASDAQ, you're still, it looks like you're in on the third bar. It moves so fast. But those buy stop orders are awesome. And then this is Andy. Everything says up. It's working the potential to break. You get in at the mid band above. You know where your stop should go. You get paid. Why'd you close yourself out, Andy? You know that small trigger look. What made you jump ship? Was it an accident? Gino, we can work on that. We can work on that. It starts with having a reason. Let's do a management lesson, guys. Let's use Andy's chart. Sorry, Andy. We're going to use Andy's chart for a management lesson. All right. And it starts with this look, right? That is the best of the best. Can everyone agree that's the sexiest momentum I've ever seen? That's amazing. This market's likely to continue in the direction of the trade. Andy gets in. Love it. Takes quick profits. No worries. And then I want you guys, and Gino, maybe this will help you. From time of entry, and you do this out loud. Out loud. What changed? So, on his first exit, what changed? Well, he got to the correct side of the small triggers. That's an advantage. And his second exit, what changed? The small triggers were strong. That's an advantage. And guys, if you start asking yourself a little bit, well, what changed? I'm in this trade. What changed? What's the negative that I see that needs to take me out of this market? And if you can't come up with anything, guys, hold your trade. Now, if you hit a line, that's a change. You've reached a termination. If you get 3 divergences, that's a change. But sometimes, guys, all it does is it just keeps getting better, and we get this nasty little what-if monster. And guys, the what-if monster shows up when you take the wrong trade, because it's that voice in your ear that says, but what if it goes anyway, Paul Flowers? What if it goes anyway, PFI? I know I shouldn't be fighting momentum. I know that I'm not supposed to trade against all this stuff, but what if this one works? Hold your position, increase your stop, right? And then you get slaughtered and you wonder where your accounts go. The second one, the second what if that you have to beat these demons through repetition and practice and having rules is the one that says, I know everything is in favor of this trade, but what if it magically changes direction, stops me out, takes my money, and now I'm homeless and I already can't dance, so I can't make money on the street corner? And you have to fight that what if too, guys. And you're going to fight these every trade you take. If you take the wrong trade instead of exiting, the what if will keep you in the wrong trade. If you're in the right trade, the what if will keep you from holding. So this is where practice comes in, guys. This is where muscle memory pays dividends. The more times you see this momentum reach the next area, the less likely you are to jump out prematurely. So Gino, you've got to go back and look at your trades and say what changed, right? So you took profits at trouble. Beautiful. You didn't have change until you got to the wrong side of those triggers. But even on the wrong side of the triggers, Gino, you're at an area inside of favorable large triggers with the best look ever. And then 3 divergences is your change. There's your reason for exit. What changed? Nothing. Until maybe the second divergence. Right back to a mid-band inside of favorable large triggers. And off it goes. So maybe that'll help. Maybe that'll help a little bit. Asking yourself what changed. Guys, I probably would have lost this one. I don't know if anyone else did. Tail into momentum, clear path, virtually no risk. But it's on the wrong side of triggers where we're not supposed to go, right? And look how far it dropped. Some people will risk 4 or 5 on that one. If you don't think I'm super exact with language in the beginning, guys, we'll talk about this trade. We'll see if anyone took it. So, Ollie, you took it. Great look. Awesome entry. And it went up without you. That happens sometimes. That means it's not your money. And you lost that one, Ollie? It usually does. And the thing that changed on that one, Ollie, is when it did come back down, you know what? No, I'd lose that one all day with you. You and I would call each other up and say, God, that was pretty. And it just didn't work. It just didn't work. They can't all work. We wish they would. They can't, right? Think of everybody you've ever asked to go on a date with you. Not every one of them worked. Except Morgan. Look at his avatar. I bet it's never not worked. It's just a normal part of a positive equity curve. Anything that wins 70 to 80% of the time, it's obligated to lose 20 to 30% of the time. Let's see what Pete did. Pete said, check it out, Mark. Everything says up. I'm coming from a termination. It pulled back, but my triggers were split. And you know what, Mark? I don't feel like that's an advantage when there's 2 correction points. So let me tell you what I'm going to do. Ollie, pay attention. I'm going to wait for a reversal bar. And once I get the reversal bar, I know where my stop is. And that lets him move up. Everything is great except those darn triggers, and Pete waits for confirmation. I love it. Pete, great job. And then let's see if I can say that right. And Androcles? Maybe you're Greek. I got you next. You're right after C-Dub here. Going for momentum trade with the Dow. I had no pullback. Then it pulls back to the perfect area. Ah, patience, patience, patience. I love it. C-Dub. Are you in here, C-Dub? Cool. This was my own personal lesson that I'm going to share with you. And you're going to love this. I really do. I really think you're going to. C-Dub, is that odds favorable momentum? I want to make sure that you can identify it. No. Is that odds favorable momentum? It's almost too easy to avoid that. I can't take a momentum trade if I don't have momentum, right? But with the triggers up, all of the triggers up, every trigger up, in one stinking line, 2 lines inside of those triggers, I love that you held this one. Because every momentum trade that fails, not every, but a lot of momentum trades that fail when the large chart is really screaming that direction, they just turn into trend trades. So C-Dub, I dig the hold. I don't care for the first entry. And I think you would have been a lot happier in down here, but you caught it, right? You caught exactly the way, hey, what's up, TLC? You went back and you policed yourself. But this right here, once again, this is, guys, when your brother is John Novak, I sent him a picture of one of my momentum trades, C-Dub. He goes, really? How the hell are you going to trade momentum if there's no momentum on the charts? And I was like, don't use logic on me, John. That doesn't work. Yeah, no rules. But you still named it. That's why I did that. But, dude, great hold. And way to get paid. Dig it. Nice recovery, man. Nice recovery. And your recovery probably had something to do with recognizing that pattern of pullbacks to areas inside of triggers. So you knew where your stop had to go. All right. Androcles. That's just fun to say, man. Just trying to learn. Triggers trending up. Yep. Close to the fib, target at fib. Let's see where your entry would have been. Trying to learn, triggers trending up, clear path here. Close above fib, target at fib. So it's a different style that you're looking at here. It's not a high probability trend trade, Androcles. Are you with me? But let's do this. Let's talk about the awesomeness. You're seeing the momentum, and you're seeing it well. This is the trade that Pete took. And this is not a high probability trend trade. This is literally, like you posted on your chart, This is saying I have so much stinking momentum that it's likely to make it to the next fib. That's all it is. And then you just jump in. And I think Pete took this exact trade. So this is one of those examples when you can begin to say to yourself out loud, I have momentum. I have room to the next fib with all of that momentum. I'm going to find an opportunity to capitalize. So some of the great things, using fibs for targets, outstanding. Recognizing momentum, outstanding. And what you have here is the potential for this area to break. Until the triggers get, both sets of triggers get above, it's just the potential for the area to break. Nice job, man. Welcome to the classroom. Oops, sorry. TLC, I just saw your question. Give me a minute and I'll answer it. Steve Diego, weak bottom, odds favorable, trading the NASDAQ. Getting in against those small triggers, Steve. Easiest entries right here. Steve, have you gone through the spreadsheet about entries on the NASDAQ? Dude, fighting those small triggers is rough. Even on the 10-2, waiting for a reversal bar. Okay. Potential to break, weak bottom, odds favorable, pull back to area inside of favorable large triggers. Had another fear of missing out with no divergence on 10-2. Needed to wait. Okay, there you go. Cool. Sorry, man. Then the second contract got you break even. And this is, Steve, your trading plan will grow organically. That when the second lower divergence prints, you may exit, but with the rules looking good on the large chart, you may re-enter on a reversal bar to carry it up to the next level. And that may be the next step in the plan. Morgan, strong top, odds favorable, directly into a termination. That's not a 50-50 trade, Morgan. That's a directly into a termination condition. Rule number 2, not met trade. 100%. 100%. No clear path. But with no divergence in the perfect entry, you get paid right back to trouble. I love the trade, but not a 50-50. Because of this. This eliminates this fib. Blah. That's a 50-50 on that fib, but you've already reached the area that may create a bounce. Does that make sense? You were directly into a termination, but that area had the potential to break. Price went through it, and then you reached the next trouble spot. And once you hit the next line, the process starts over. 100%. You're directly into a termination. But no divergence, strong triggers, perfect low risk entry, quick profits. Dig it. Not mad at you. And then TLC, did I figure out the price above the small trigger thing you were working on? What are we talking about in reference to? Help me out with this. I'm going to say yes, because I rarely leave a stone unturned. But if you'll give me a little clue as to what it was in reference to, I will gladly share whatever lesson I'm capable of sharing on it. And while you're typing, let's go see what the live market's doing. Darn terminations again. Son of a gun. Oh, I know what you're saying. Cool. So one of the things, and this just keeps people from jumping out too soon. If I'm long, right here, TLC, this is all it was. I'm going to run a line up these small triggers. Do you notice that the market continues up until there's a close on the wrong side of them? That's all it was. Guys, as long as you don't close on the wrong side of those triggers, the market's pretty much just going to continue up. And then once you get to the wrong side, you're just not sure. That's all it was, TLC. Price doesn't close on the wrong side, right here. That's the end of your run. So if I'm holding a contract, yeah, if I'm holding a contract and I'm like, I'm going to hold this thing forever, TLC, I will literally, let me see, let me get back to the live market real quick. If I'm in a short trade, and this is probably about to hit, I'll literally follow, and initially when it gets further through it, I'll keep my stop on the wrong side of the triggers. And then once it starts to mature, I'll literally put my stop on the reversal bar marker all the way through. Guys, that wasn't a trade. Everything says up. That's what simulator's for. And that's all it was. Yeah, it's just a small chart. If I'm in a trade, if I'm long here, there's no reason to exit until I get a reversal bar. If I'm holding for bigger moves. But what's the other side of that? It means that I'm going to give back 10 ticks. So I'm going to give back $100. Always, every time. On that last contract, I'll give back $100. So I still get paid at fibs, right? I still get paid at a fib. But if I'm saying to myself, the large chart is so strong that I'll give it an opportunity to break, well, then maybe I follow it. Here it would have got me. If I was hoping the fib broke, it didn't. Yeah. So yeah, I did a little bit. I don't use it a whole lot, but I mean, it's a truth. Left of the small triggers, and look, it gets to the other side, and now it's going up. It's the wildest thing. Stays left of the small triggers. Oh, there's your first close on the other side. So if any of you yahoos went short here, with all that momentum on the large chart, how cool is that? That's a big move. That's a big move. Are you saying the mess is a mess, Kurt? Show me a picture. Is there a lesson in it? TLC, does that make sense? And then Gino, I don't have micro ES, Kurt. And then Gino, that's something that you may be able to incorporate a little bit too, as you're trying to hold for bigger moves. And then you folks that have range charts, there's a pattern with odds favorable momentum on the range chart that allows you to hold for bigger moves as well. So there's always something. Odds favorable directly into a termination condition. Area inside of large triggers. The almost look. I like it, C-Dub. It's the almost look. So close. And guys, you're going to get to the point to where the majority of your trades are medium probability trades. Trades where there's an issue, right? So, C-Dub, you've got killer momentum, the potential to break. No divergence. Easily defined risk, right? You might be willing to take a shot at this one eventually. But one of the things that happens is new users start taking all of those maybe shots before they're ever consistently profitable. And it typically keeps them from becoming consistently profitable. So on the ES, on the MES, 56.27 on a small chart, you say it's starting to chop, Kurt? Right at a termination condition on the large chart? Probably not a coincidence. And then for you guys that forget, I love this. One bar, you start to see the chop. But the termination says, just relax. Let's see what happens. And we made it through the pictures. which means that you guys have almost 30 minutes to ask me anything that you want to ask, to talk about any subject that needs talking about, to show me any more pictures that you want to show me. Otherwise, I have to go through this awkward silence where I just sit here. So the MES, Gino, is 1/10 the size of the ES. So some people will trade it because it reduces the pucker factor. So watch. If I change this to the MES, oops, or the NES. If I change this to the MES, right? Maybe you're not on a prop, or maybe you are in a prop firm, but you're not worried about the results. You're worried about the process, as you should, right? And it reduces stress levels. Kurt, what I found, and you may be different, so check it out, Gino. If I go short, go short. Oh, it's still calculating. I may be in like 8 shorts. But what happens for me, Kurt, and everybody's in a different place in life. Yeah, I went 12 on accident. It's only $90, Gino, on a 12 lot against me. And the challenge, the biggest challenge, is that you will say things like, well, hell, it's only $20. Who cares? Well, it's only $8 on the stop. Who cares? And what it does, because I'm not going to lie, guys, I'm not trying to brag, but if I lose $15, it doesn't affect my quality of life one bit. I can go throw it in the front yard, set it on fire, no big deal. But the thing is that it's also very hard to make a lot of money. So you take a trade and it's perfect and you're up $30 and you're like, what the hell am I going to do with $30? So you start bumping up contracts and you start taking chances and you start doing things. If you're using it to practice your rules, if you're using it to have a skin in the game, right? It's awesome. And I love it. And I've traded micro crude and I've traded micro S&P. Back before prop firms, when I was first starting out, I lost $5,000 in 2 hours. And for me, back then, $5,000 was a lot more than I should have lost that day. 22 trades, not one of them won. And I went to the micros. I had to get my mojo back. And I'll tell you what, if you're not comfortable in your plan, you'll still pucker on the potential for a $15 loss. So it gives you a skin in the game, is what it is. And I think it's a great tool for people that don't want to use those prop firms. I think it's a great tool for actually having risk. Of course, Mama stuck around. I don't pay my bills with trading. That's not what trading is for. I don't know if you guys noticed it. I have a job. Typically have a couple jobs. It keeps me busy and I don't go nuts. If your wife left because you lost $5,000, you were probably an asshole before you lost the $5,000. Hypothetically speaking, of course. So yeah, Kurt, did you swap over to use the large chart ES? They're so similar, but they're not always the same. So you might not have seen the reason for all of the indecision here if you didn't have it. I think it pays dividends, but I don't give trading advice. I never give trading advice. That's not my thing. But if the micro S&P follows the large S&P, I want to know where the large S&P might react. Because if I have the micro, and dude, I didn't see these two fibs, well then I might have gotten long and gotten my ass whipped when everybody on the large crowd says, hey, guess what? We're going down here. So I'm a huge fan of follow the large, execute on the small if you're going to do that micro thing. Your results may vary. Did that answer, Gino? Chop. Yep. See, you had a clear path. So you had a clear path. You also had a good looking 50-50 up here with 3 divergences off the low. So Kurt, you're getting a very different picture on the micro ES than you're getting on the large ES, I think. They're trying to break, but I have 3 divergences right at a fib. Oh, that's scary. Jeffrey, I see you. You got something to say. What do you guys want to talk about? Here we go. Oh, I'm jealous. Monsters on the Mountain to see all the 80s hair bands? Yes. Dude, have fun. Who's in the lineup? I'm going to have to Google that. We're all going to show our age real quick. 38 Special, Tesla. Was 38 Special really a hairband? I think they were pre-hair bands. Night Ranger. I love it. That's going to be fun, dude. That's going to be so much fun. If you ever get a chance, I don't know if they're still bouncing around. It's an 80s cover band. There's Steel Panther. They're freaking amazing. I've seen them like 10 different times. They are everything stereotypical about hair bands. A lot of fun. A lot of fun. Don't bring a dart. A date. Yep, you've seen them. Oh, man, what do we want to talk about? We covered hair bands. We covered momentum. We talked about terms. We talked about entries and why great entries create less risk. We talked about why you shouldn't fight the trend. And then for you counter trend traders, PFI, are you still in here? And then Paul, I saw that you took a couple counter trends too. And Paul, I think you gave it the best chance of success on that picture from yesterday. You guys that love to fight the trend, one of the things, if you embrace the idea, take care, Jeffrey, have fun, man. If you embrace the idea that you shouldn't fight large triggers, it keeps you out of a lot of trades. And then if it's really going to be a top, man, if it's really time to go short, everything will roll. Notice how it didn't roll on the chart over here? And you could get whipsawed in there trying to fight everything. It's so much easier to just go with the flow, to go with the trades, to not fight, to have a clear path. And I say it every day, and maybe I say it so I believe it too, because guys, you're going to be in this constant state of wanting to be in a trade. Hey, Tom, take care. Nice job today, man. A lot of patience today. Have a good one. We'll see you tomorrow. You took a 50-50 earlier and got another 300. It really works. Amen. It does. The only people that don't think it works are the people that don't bother to do the work to see if it works. I say that with the utmost confidence. I say that even a little bit arrogantly. The people that fail with this software are the people that refuse to have a plan, the people that refuse to follow the plan. Those are the people that struggle, guys. You have the greatest hammer that man has ever created. And if you don't bother to learn a little carpentry, it's just a doorstop. That's all it is. So learn to use the tools. That's what this class is for. It's designed to teach you to use the tools. And then once you learn to use the tools, guys, you got to get your brain right. You got to get your brain focused. So I'm going to give you this right here, 7 Habits of Highly Successful Traders. That's an amazing read. John Novak made me read it every day for 30 days. That's okay. Simulation, you're building good habits, man. And then this other one is emotion-free trading. And I've probably read that one 5 or 6 times now. Emotion-free trading has this awesome thing. And I want to see right there. Acting in your own best interest. Acting in your own best interest is one of the most powerful phrases that I've ever heard in regards to being successful with trading. Is trading without momentum acting in my own best interest? Is trading into a termination condition acting in my own best interest? And your answer may change as you change. Is not trading from areas in my own best interest? Is jumping into trades in my own best interest? And you're going to have to answer that. 50-50 trade, one divergence. You got nervous when it pulls back after you get in. What's a good remedy for that? Having rules. C-Dub. Having rules and believing in your rules. When you take a 50-50 with divergence, what's an exit condition for you? Do you have one? But the other good remedy, C-Dub, man, do this a couple times. This is 2 bars. All of this, C-Dub, happens inside of 2 bars. All of this happens inside of 1 bar. C-Dub, it is not uncommon, unusual, irregular for this smaller, faster chart to have fluctuations. Notice how your stop kept you safe the whole time? So you just got to develop trust, brother. That's all it is. You just got to develop trust. And there's one other thing, C-Dub, is you showed me a pretty kick-ass winner earlier, but you're down $600. Why not show me the ones that didn't work? Why not show me the ones that I can help you with? Just throwing that out there. You don't have to answer. You don't have to answer. Hiding losers, guys. Hiding losers doesn't help. Never has. That's a lot of down, isn't it? No problem, C-Dub. All I said is that you need to have rules. You need to trust your rules. Don't hide losers. I don't know if you're still cutting in and out. We're home stretching it, guys. Keep me busy for a few more minutes. Keep me busy. Texting my brother right now and I'm saying they won't talk to me, man. What do I do? They just keep killing it. Offer money? I am. TLC. I give you everything you need to make money every day. The problem is I've got 36 horses in here and most of them won't drink when I get them to water. That's on you guys. I stopped worrying about that. I used to. I used to worry about everybody's success. And I'm not going to lie, guys. I have zero to do with it. That's on you. You're welcome, Steve. Have fun at Costco. Elbows up, man. That's a dangerous place. I love Costco, though. I can spend more money in Costco than I can lose in the market in a day. Have fun, brother. They just keep going. and going and going and going. Man, that's a market on its way down. Pretty cool. Let me look and see if I can find any of my new names. So newer folks, how we doing? It's a lot to take in on day one. It really is. It's a lot to take in on day two, sometimes day three. But you get to this point to where it all starts to click. And you get to this point where you guys realize that the only thing standing between you and everything you ever wanted to achieve with this software is you. And it takes a little commitment. It takes a little commitment where you say, all right, I have to follow my rules. I got to get that checklist on my desk. I got to make sure that I'm doing it right. And like Rob said, and Rob, I'm sorry, I meant to read yours out earlier, but I didn't. And I should, because what you wrote in this room was amazing, and so many people will get it. Let me see if I can find it. But it was essentially that you used to think, there you go, I quit thinking I was going to get a $5,000 move, and now I pull out 200 to 300 when it's there. And Rob, that's the secret, right? Has anyone else noticed that? Getting paid is the secret. It's the goal. Of course there's a difference. Let me show you what it is. Great question. Thank you. There are 3 time frames, Rob, on the large chart using Fibonacci. There is the 13.2, which is native, right? That's created there. That's the line that prints all the way out to the numbers. There's a skinny fib that seems to stop. That's from your 5-1 chart. And then there's the fat fib. And that's from a 21.3. But here's the challenge, Rob. All 3 time frames are put on there because they're all so important. However, one is not more important than the other. Can't stress that enough. One is not more important than the other. If price hits a line, where are my triggers? Here, the 21 stopped it. Here, a divergence low stopped it. Here, a 13.2 chart stopped it. And the 5-1 created the bounce here. So they're just from different time frames, but they all have the exact same power. There you go. Good question. So 21, and then that one's the 13, and that one's from the 5-1. And guys, when the market absolutely kills it like this, I won't consider a long until my large triggers roll. Just won't do it. Won't even consider a long until the large triggers roll and I'm back above fibs. Ali, you all good on the day? Surgeon, how you feeling? Pete, Indu, Samuel, Gino, Muser, Hamid, Cheetah, Jen, Clara, TLC, Lenny, Zorro Spice. Zorro Spice. Sounds like an 80s band thing, right? The other Mark. All good? Love it. Always lose when you break the rules. Isn't that weird? Always lose when I break the rules. But for some reason, Ollie, we still find it hard not to break the rules. I think that's human nature. I really do. I think it's human nature. I think we love to be correct. We love to be right. We love to be smart. And I think that's the downfall of a lot of us. I know it's been my own personal downfall quite a few times, where I say things like, and check this out. Let me go if you guys have ever done this. This is a great example. I'll take a picture before it drops. Where I say, because all of my triggers are below resistance, I go short right here. And then I get stopped out. And I'm like, damn it. So I go short again. And then I get stopped out. And I go, damn it. None of my rules are met, but I form an opinion about what the market's supposed to do. And then when these 2 shorts fail, I go, well, it's got to be a long, and I get stopped out here. And I go, damn it. Like, well, maybe it's going to go long from this fib. Son of a gun. Anyone else ever done that other than me? Yeah, I was telling my brother yesterday, I said, guys, accounts don't get blown out over a week. Accounts get blown out in 5 to 10 minutes usually, is what people tell me. When they blow accounts, it's not a week-long thing. It is a series of bad decisions, typically within 30 minutes of each other, that becomes so detrimental. And this is why following rules is so important. And you just did it, Ollie. Lenny, all it is a reversal bar marker. That's all it is. It shows you the price where that bar becomes a reversal bar. The only way I use that, Lenny, the only way I teach to use it, isn't even on a small chart. The only way you'd use it on a small chart, Lenny, is if you said, hey, I need a reversal bar to get in. It shows you exactly where that reversal bar is going to print. That's all it is. It's an exact price where the reversal bar is going to print. But on a large chart, you'll use it for the gap theory to determine that the midband is a termination condition. So if you reach a midband on the large chart and the trigger lines are above that reversal bar marker, the midband's a termination. That's it. It just says no more shorts. If you reach a fib and the large triggers are above the reversal bar marker, it just says no shorts. So there's your reversal bar marker. If you hit something above and the triggers are below, the large triggers are below, it's likely to close the gap. That's all it is. Those are the only two uses I know of for it. The gap theory, and then if I need a confirmation bar for entry. Does that help? Yeah, you're welcome. People are so bummed to learn that I don't have a trade to teach to get back on that little sucking noise to the large triggers. Rob, probably not what I need to open up in the room. I'll look at it later when the video's not